Okay, good morning everyone and welcome back to day 3 of the Realty 2.0 conference. Well, with a new day brings with it new networking opportunities. This session talks about the impact of blockchain innovations on the real estate world. To speak on this subject, please welcome Jinwei Zhang, who is the CEO of SleekFin Inc. The topic is the future of real estate in the blockchain era.
Good morning, everyone. Oh, okay. So have everybody had fun last night in Vegas? I hope everybody had a good time. Okay, so today is the day 3 of the conference. So we're going to talk about the future. So we're talking about the current, the past, now we're talking about the future. So at the beginning, I'm going to introduce myself, why I'm here talking about the blockchain. So I am the CEO of SleekFin, and my background, you can see there, if everybody knows what's AIA, I'm a licensed architect. So I know about the construction, design, part of the real estate, and also I'm a licensed mortgage broker. And so I know the money part of the real estate. And on top of that, I'm a businesswoman. And I did my MBA in Berkeley Haas several years ago. Then personally, I'm a developer myself. So from start with the single family, multi-family house, and goes to hotel project. But right now, I mainly work on data centers and data centers for crypto mining. So that's what I have been doing. So if any of you have an industry property with a lot of power, come talk to me. I'm still looking for sites, okay? Then I'm a real estate investor myself, and I also invested some money in crypto. That's a very different investment. It's opposite of the real estate, and the real estate is probably the very stable investment, and the crypto, on the other hand, is not. And I'm an entrepreneur myself. I have several companies under my belt. From a design firm to a development company, and to recently, I started this fintech company with my classmate, Vanky, which he was a classmate with me in my MBA program. And so that was great. So let's talk about what technology can help us in the future. So the thing we can use for real estate, and we're going to talk about is NFT, DeFi, crypto, and that go with the whole globalization of the real estate. And before all of that, I added these slides just to introduce a couple concepts about blockchain technology for everybody else who's not very much into this field. So we're talking about crypto first. Does anyone know what all those symbols are about? Anyone here? You do? No? No, okay. Okay. So, well, I was going to give out a prize for that. All of them. One, two, I think that's 6 of them. No, that's not the Coinbase. What's that? There are 3 harder ones.
Yeah, I can't get those other 3. I don't know.
Huh? Algorand, the top one. The one looks like a C, that's a seller. Bitcoin, Ethereum, Dogecoin, and Cardano. So that's all the symbols. So most coins has a function, but Dogecoin, I don't know if anybody knows about the Dogecoin. It started as a joke. You know, people made that coin just to make fun of crypto itself. Then Elon Musk took it to a high level. He actually endorsed the Dogecoin on his Twitter, and that coin went up dramatically in price. I think, you know, my personal opinion, you know, I love Elon Musk. You know, he's a brilliant guy, but that is his scam, and I don't really think there's some real function of that coin. And also, you know, big disappointment is his Cybertruck, and I was hoping to have one, but unfortunately, it got deleted. Okay, so then we're talking. So the crypto market. The top 5 cryptocurrency, and to be surprised, 2 of them are stable coins. So we have a Bitcoin, which is about above $800 billion market cap, and then secondary is Ethereum, have about $300 billion market cap, and then it go down to the stable coin, which is the Tether, the USTD, the stable coin with a T. That one is about $82 billion cap, and that's something really get used on the chain to perform payment. Which this coin is tied to US dollar, so one coin equal to about $1. And so that is a great tool to pay someone, business transaction, and throughout the globe, and in a stable sense of money. And so then the 4th one is BNB, is Binance's coin, and the 5th one is the blue one behind USTD. That is USTC. That's about 52 billion of market cap. Then the 6th one is a very interesting coin. It's Solana, and that is so far probably the coin I personally think will be the future of the crypto transaction. Solana can handle 65,000 transactions per second, and also at a fraction of the cost of a Visa. So Visa charges you about 1.3% plus a quarter dollar, 25 cents on top of that, to something even more, to 2.7% of a transaction. That's how much Visa charges you on their network. But on the Solana network, every single transaction costs $0.00025, which is a fraction of a cent. That's how cheap it is to use crypto to perform payments. So for all those reasons, you can see in the future, and this will take over the current financial system, perform payment, thinking about how SWIFT and ACH will be replaced by crypto in the future. So then stablecoin have another set of stablecoin connected with the price of gold. Now we're not going to get into that. So that the 3 symbols are USTC, USDT, and USDC, and DAI. And then we're talking about the NFT. So NFT is something really hot recently, if you ever been to the crypto world. And right now, there's a huge hype about NFT. So what is NFT? So NFT is a non-fungible token. What does NFT do? NFT works like your DNA. Basically, you can think about that. It gave an object a unique identity. How much does an NFT worth? In my opinion, nothing. It's actually just a tool to identify the value of the actual object behind it. But it's a very, very important tool that we can use in the real estate transaction, because every single property is a unique object. And we can use that particular technology to identify each single piece of real estate. Then we're talking about the DeFi. That's another hot topic. So decentralized finance. What is that? It's basically same as the regular lending, but it's performed on blockchain. So think about the crowdfunding, and think about crowdfunding with a smart contract, and that contract will get delivered automatically without a third person to involve to go after to get your money back. So that's the system can be right on blockchain. So that is actually very, very hot topic now. And there are so many coins recently minted to performance decentralized finance. So that will be the future of lending, and that can be utilized in the real estate world in the future, okay? Then we're talking about the blockchain. So blockchain is the back-end technology of all those things. So it's basically something very simple, just a whole bunch of a block, and each single block have some data right inside, and they kind of link to each other into a chain. So instead of one place to verify information, you have to go to many places to verify the information. So that make it secure and make it fast, and nowadays nobody can really shut it down. So make it transparent, because it's actually pretty open in the system. If you can set it open and it's for people to verify and check. So why blockchain? So blockchain can provide a secured transaction and reduce compliance cost and speed up data transfer process. So that's the three things that the blockchain can help. Like the real business transaction. And people ask the question, is blockchain really secure? I heard a story about things that get hacked. Well, things get hacked. Your bank account can be hacked, and the blockchain is way secure than your money in your bank account. And anything can be hacked, but blockchain leaves a trace. Anything can be traceable on the blockchain. The hard part is to trace that chain to a real person. That is the hard part of a blockchain, to trace down to say, where's the criminal? But on the chain, everything is traceable and everything is documented. It's actually much secure, much transparent, much safer, and than actually a cash transaction. Efficiency. On blockchain, we can write a smart contract. And a smart contract is something can be executed automatically. And so you don't have to have a person to go after the debt, because once the leverage drops to a certain level, and it will be automatically cashed out. So I give an example then so definance a lot of people on the chain to use their Bitcoin or other asset to borrow money against their coins because they do not want to sell them. So for example, they put on a chain to say, I want to pay 20% of interest, borrow against my Bitcoin. And then normally you get maybe 1 to 2 leverage. So if your Bitcoin is worth $1 million now, and you can probably borrow $500,000 against it. And then there will be a lot of people on the chain to say, okay, I think I can lend money to you, and I make the 20% interest. Then you write down a smart contract on that. The Bitcoin price goes up and down. And at some point, the Bitcoin price dropped to half, and you don't have enough leverage, and unless you keep buying Bitcoin and put into the contract. Otherwise, they're just going to automatically sell all your Bitcoin and pay back your investor, pay back your lender. So for people who lend money on the chain, it's pretty safe, pretty secure. It's almost like a guarantee, not a guarantee unless the whole blockchain break down or some regulation against it. But it's a very safe investment in the DeFi world, because the smart contract will get executed automatically, and you don't have to go after it. It protects your investment without a human factor. Then transparency, and you can timestamp everything and on the blockchain. So everything is timestamped and trackable, and for each single transfer transaction and everything else. Then we're talking about where can blockchain be adapted. So first, we can use it in purchase negotiation. So thinking about you are negotiating with your buyer of a house. Your buyer said, I would like to, they put in an offer. Your list for $1 million, the buyer said, I'm going to offer you $900K. And, I also would like to have the refrigerator. And you send something back to say, no, I will take $950K, and you don't get the refrigerator. And at the end, this negotiation can be all right on the blockchain. At the end, you can generate a document to say what you agreed on. For example, you agreed on $960K and give that guy the refrigerator, and that will be right on the chain. And that cannot be changed. That will be time-stamped. You can check who's agreed on what time. And it's kind of like the DocuSign in the way, and that is right on the chain, and it can be automatically generated and put into part of your deal. So, and that cannot be changed. And so it's not like a real document, that's potentially you can scratch it off and write down something else. So then loan document. Loan document is another thing. It's a simple transaction that information can all be right on the chain. Like you said, you have so much income, and I'm going to offer you 4% interest rate. And 2 days later, if I change my mind to say, I think you are too risky, you're going to be 4.5, and that's not going to work. So for both the buyer and the lender, so that will be some very, very transparent information can be right on the chain during the loan process. So everything is stamped, and everything is open and transparent. Then title verification and co-ownership. So this part, in my opinion, is the most valuable part of a blockchain application on the in real estate. Thinking about each single property, and every single property is a unique object. And you have a different title. It's talking about what is this property like. And with that, we can use the NFT to generate a unique title for each single property. And right now, we can digitize all the title report there. Then, if that is going to happen, you would not need to buy title insurance anymore, because those are verified information already. And it's not just verified by one title company, it's verified through different blocks. So nobody can really cheat on you unless they can collect all the blocks on the chain and modify the information, even though and those records will be there openly for everybody to check. And the co-ownership, that is what we have been talking about, the crowdfunding of real estate investment. So that the percentage of real estate ownership can be tokenized into as many parts as we wish to. And we can sell the tokens for many people for ownership, especially for commercial real estate. And even for residential, so the tokenized ownership can be transferred through will or through to your ancestors. So in that way, we can save a lot of legal problem, legal cost. So and then you can keep owning the property without having to sell it if you're going through a divorce or going through a change of ownership reason. Then in commercial real estate, we can use the smart contract to write down rents, how rents are going to transfer into dividend, and how that is going to be automatically paid out. So that is going to save a lot of manpower there to execute that. On blockchain, it can automatically execute all those payments through the smart contract. And whatever on the original contract you agreed on, and it will be automatically executed, so that gave the investors a lot more confidence of what they're going to get for payout. Then the last part we're talking about is global investment. So that is a very, very interesting topic, and I'm always very, very interested in. 2009, I spent several months in South America, just to experience life. That was not a particular reason. So I remember I was in Brazil. I found someone to bring me into the favela, because I look at the favelas on the hill from the beach. I'm like, what's that world going to look like? So I finally found a guy who willing to take me into favela to experience it. It's a very, very different world from the real, like down the hill. So people are really poor there. Let's say they don't have running water, they don't have sewage, they don't have electricity, and they don't have people pick up trash. It's a really sad place for humans to live there. But everybody in favela, the kids I talked to there, they all have a dream. Their dream is to get out of the favela and live down the hill. And they're talking about, I can, when I grow up, I can buy with my brother, sister, cousins, someplace we can live down the hill. And because they cannot afford a property on their own, but maybe take a whole family, take a whole extended family to afford something after the poverty. And that cannot be done at a current, in the current world, because to get a mortgage and everything, they need to verify your job, your income, your background, and everything. But once we tokenize the real estate, and those people can really put together money to buy a piece of real estate, and without having to go through the current banking system, because nobody will sell something to them. And so that is what can happen to help the disadvantaged group of people around the world. And I took a trip to Venezuela, and to be surprised, and people in Venezuela loves America. They love America. They always wanted to go to America to say, they asked me what America look like, and if they have opportunity to own a piece of property in America as a family, they would. They love America. They love the security of what the law can bring to the society, because in a lot of those countries, there's no sense of security. You can buy something, and the next day it can be taken away by the government, by the drug dealer, by somebody else. So there's no sense of security of ownership. And that can change by using blockchain for those people to invest something they feel like can bring to their future in America. And next thing is ideas are nothing. Execution is everything. So we talk about the ideas and a lot. So how are we going to move forward with it? So this is what is Sleekfin about. So it's an integrated marketplace for real estate. So how does it work? So we basically made 3 products. One app for the end user to buy real estate, and a website for the agent or developer to lease their property, and another website for lenders go on to the site to filter out the borrower they want and to potentially fund their customer to lend the money to. So it's a 3 part of a system. And what it do is when a user uses a smartphone, then they can go up there to looking for properties. It's a little bit like you shop property on Redfin or Zillow, you look at it. But the difference is you can put in an offer. You can write you can write something directly, and that gets documented on the blockchain, and to say, I would like to buy it at this price. And that gets pushed to the agent or the developer to say, okay, we're going to have somebody would like to buy this piece of property at this price. Do I willing to sell it? Or there's a really great property, and there's several buyers bid on it. That can be acting like an auction too. And so people put in offer after offer to say where's your highest offer you can get to sell that property. And once those offer in, it creates a block. And those blocks get distributed around the chain. And to have that information, like talk to their friends, their neighbors, and distribute the information there to say, hey, now I have an offer like this. And then the neighbors, the friends of that block will verify the information and to say, okay, we all know that you can actually receive the offer like this. We all remember it. We can be your, we can support you on this. So it gets verified. Then this negotiation, this information gets added to the chain, and it stays there. So that block gets added. So that's how your negotiation and get added onto the blockchain, and that can be created in this app. And then you say, okay, we agreed on buy this property for 500K. Then what are we going to do? I need a mortgage. Then you go to the lender, you put your information in. So basically, the information you put in to buy a property is almost the same information you put in to get a mortgage. And in the current system, you have to do the paperwork twice, which is unfortunate. You could save that time, just push your information to the lender at the same time. And then you negotiate with the lender about your mortgage rate, your down payment, and everything else. And all the information will go through the same process and right on the chain, and that can be verified in the future days. And once that get verified, and then you have money, you can go through a transaction. And in current days, that transaction have to go through a title company in America and have an escrow company to support it. But in most part of the world, a title company and escrow company, they do not exist. So what the people do is they actually put the down payment direct. The buyer just send the down payment directly to the seller, and that's in the real estate transaction. That's what the people haven't been done for most part of the world. And that creates a problem is, what if the seller just run away with your money and not give you a title, or the title is not clear, and you don't know, and you are taking a risk of that. So on the blockchain, and that money can be written down into a smart contract that can have a condition of how the money going to you, and when all the conditions being met. So then you don't have the problem of the seller running away with your money. So that can be managed on the chain. And the title can be recorded on the chain. So you know that you actually own this property now, and everybody else in the world knows. And so you're going through the exactly same process: create a block, distribute the block, and verify the block, and add the block to the chain with the information of a title transfer and the escrow process. And then the transaction is closed. So we can do everything in one app, in one location, and you don't need a fax machine, you don't need a pile of paper, and you just need your smartphone to buy a property, and that is what you should have been doing. And the fax, oh my God, I don't remember what is that. That's like so old, yeah. So this is our team. So that's me. And you can add me on LinkedIn. It's very simple, just my name. And that's my co-founder, Venki. Venki is in India now, and he's prepared for the launch. And that is our Indian director. So we are planning to launch our product in India first. Why Indian? Because India have a very big real estate market. And it's a free country. It's a free country. And so there are laws there, there are processes there, and it's a free market. It's not controlled by the government, which is great for this app to start there. And there's less regulation. We can have 3 things all in one app, which in the US so far is not really allowed. They consider it as a conflict of interest. But our vision is have everything all together in one place for the buyer. And hopefully in the near future, the regulation can change, and we will be able to bring this product into the US market. But this product is also tailored for people here who want to invest in overseas properties, because we are planning to launch it after India to Southeast Asia, to South America, and to other countries that they have needs over this app and for real estate transaction. And there's a huge Indian community in US already, and everybody probably owns a house or want to sell a house, buy a house back in their country. So that can be a great product for them to buy and selling properties in their home country. And you can also list your property to get attraction from a buyer overseas, which you know, we kind of miss out over the buyers overseas, especially the people cannot buy $1 million house in cash because they cannot, they don't have credit, they cannot get a mortgage in US. So that is our vision, and thank you very much. And you can also download the app, just try it out. And this is still a beta version, and we're going to improve it soon. And also, it's the email you can get a hold of us. Thank you very much. Any questions? Well, I don't see there's anything wrong of trading real estate more frequent than what we have now, because money makes money, and and if you lock the money in the real estate, like for a lot of people, they invest in stock market instead of real estate because the real estate is less liquid. Yeah, so that is actually a good thing. So you can compete with the stock market, you can compete with other things, and because right now, 10% of that warehouse become, you can liquidate it when you need it. I don't see anything wrong with it.
Yeah, I agree. Thanks. And I guess another question, follow up. How do you think about transaction costs? Because and the difference between the volatilities between real estate and the cryptocurrency that you're using. So say you sell property, then you have it in a coin. That coin, you took something that was very low volatile and now put it in something very high volatile. So, do you?
Okay.
I know there's forward contracts and stuff. Like, how would you solve for that?
So I don't say it become volatile because cryptocurrency is different than blockchain itself. Blockchain is just the technology behind it. You can use a stable coin, which I talked about earlier, like a USTD, for example, the most traded crypto that is tied into US dollar. Mm-hmm. So if you sell a house for $1 million, then you get $1 million USTD to buy the house. Then you can change $1 million USTD into US dollar that you can use. And so it will not, the price of a Bitcoin will not impact your transaction because your transaction is still tied into US dollar. Yeah. It's still tied into, the real money. We think they are real, but they are not really real. They are actually digital numbers in your bank account, but we think they are real. So it's tied back to the real money in a sense.
Thanks. Thank you.
Is that what it is? I think I'm loud enough.
No, USTD is not an NFT. USTD is a cryptocurrency. USTD being used as a currency for transaction to just like a US dollar, you use it to exchange things. And the NFT is tied up think about NFT as a title of your real estate. That's an NFT. So they function differently. So there are so many coins on the exchange now. If you just open Coinbase, you're like, whoa, what are all those things? And most of them has a function, like a Doge. Not really, I don't believe it has a function, but most coins has a function. People write a white paper, they think to do something. They have a coin for finance, they have a coin for NFT, and they have coins for the game. So there's a big thing about the GameFi is people to build that for the games. So that's another big part of crypto. So that NFT and USDT are two separate coins, and they function differently. They do different things. Oh yeah. They all on the blockchain. They all write on the blockchain. But what they do is they just use it for different function. For example, you can create an NFT for your real estate. For example, the real estate worth 100K now, and so that NFT worth 100. That tied up the value of your real estate. And 10 years later, it was $1 million, and then that NFT will worth $1 million. So you can sell the NFT to transfer the title of this real estate property to somebody else, and then that's your transaction. So then that will be right on the chain to say this title being transferred from you to me, and then the next buyer can verify it to say that's the history of it.
Unfortunately, we are over time, we're out of time, but I definitely encourage everyone to connect and network with this, especially when you talk about this new currency. There's so much information, and I'm glad that you are our local resident expert on it. Thank you again for your talk. That was fantastic. One more round of applause for our speaker.
Thank you everyone.
Okay, everyone, let's keep the ball rolling and start the next speaker session. The residential and commercial property market goes through highs and lows, depending on changes in the global economy. Because of this instability, businesses must take extra steps to protect their undertakings and investments. The next session has been specially curated to help you in this endeavor. It's called Current State of the Economy, How It Impacts Real Estate, and How to Prepare Your Company. To enlighten us on this, I'd like to invite Scott Crone, who is the founder of Coda Management Group and One Stop Self Storage. Please welcome him with a round of applause.
Good morning, everyone. It's been a little bit of a different week for me. My week began on Sunday as I left for a retreat where it was it's held at a conference, a seminary for monks and priests, and so we have a period of silence and solitude. And so, a lot of people were saying usually you go to Vegas and then go to confession versus confession and then to Vegas. So this is a little bit different for me. But today what we're going to be talking about, the agenda that we're going to be going through is the state of the current economy, the potential impact on commercial real estate as well as residential real estate. I know there's a lot of residential real estate investors here. So what I'm really trying to do is look to see how I can bring the most value to what your business is. That was what I decided to focus on, to see how what information I could provide that would provide you with the most value, and then how to prepare your company for what is coming down the pipeline. So, we're a host family for a couple kids from Rwanda at Northwestern, and I was out skiing, and then they called me up the day that the Russians invaded the Ukraine, and they said, we're going into World War II. So this is a very popular thing that was on Instagram. Congrats, you survived the pandemic. Your reward is you get World War III. So there's a lot of change going on right now, and they were very concerned about it, and I tried to assure them that we weren't immediately going into World War III. But we're going to be talking about this, but more importantly, why listen to me? What is important? So I'm just going to, in terms of my credentials, I don't have a lot of, I have a lot of initials behind my name. What I do have is I have a Master's of Architecture. I've studied this topic for the past 35 years within my business. I've been through 4 major recessions. And so, I don't have all the other credentials in terms of an economist or all these different things. But having a degree in architecture has taught me to observe. We have to study things. You're called a master builder. That's the actual definition of an architect. And so to do that, you have to understand your client, you have to understand your environment, you have to understand a lot of different things. And so the greatest thing that I was taught, and I've also taught architecture, is the ability to observe what's going on. And so this whole talk is based upon the culmination of 30, 40 years in the industry. So this is the greatest thing that's ever happened to me. I got to play hockey with Wayne Gretzky, but other than my family, I should say, so the greatest activity that I've done. But, you know, that is why we're, you know, being able to observe, being able to study things is what I'm bringing to the table today. So where do we stand in the economy? I'm not going to bore you with a lot of charts and graphs and this and that, but I am going to base it upon what I am seeing in the economy. So to begin with that, I'm looking at, for instance, housing start versus the gross domestic product. You can see the different charts that are going on here. There's a lot of detail here, but the bottom line is, you know, whenever there's a big drop, this is not a good thing. You know, these are the areas where not so good in life, right? The federal interest rate versus the GDP. So, you know, we have growth going right up here, but look where the interest rate is. You know, there's a big divergence that's occurring right here. Unemployment. Again, we're seeing some major changes, major shifts in what's going on in the economy. And the biggest thing is the inverted yield curve touched zero. So there's a lot of different things going on. And as I was studying these different things, I was really reflecting back to the 1979 and what was happening. So we've had some major recessions in our history, and obviously we had the Great Depression, but then there was the 79 recession, and we've had the internet boom bust, and then we had the housing bust, and then technically the pandemic was not truly a recession because it was not 2 consecutive quarters. We only had really 1 month of downturn, but a lot of people consider it. So we're going to play a little game, a little Jeopardy game here. So if anyone wants to participate, but this is deep thoughts, but we're going to have different topics similar to Jeopardy. So I compared 1979 to 2022. And so here are some different topics. Price of gas per gallon. Can anyone guess what the price of gas was in 1979? Close. It was 89 cents adjusted to $2.31. You weren't too far off. Now, in Chicago, it's over $5 a gallon. But this was the national average when I prepared this slide. Russian invasion, another commonality. We had Afghanistan, and obviously we have the Ukraine. Interest rate increase. Anybody guess what the percentage difference was, the interest rate increase? I'm sorry? 10%? It was approximately 2%, went from 9 to 11%. And right now, as Greg talked yesterday, you know, it's moving quickly right now. Right now, it's approximately 1.5, but we're getting close to it. But we are at historic lows compared to 9 and 11, 12%. But back in 79, in terms of housing, if anybody recalls, it wasn't the value of the house that was important, it was the value of the mortgage. And the trading of the mortgage was more important than the trading of the house. Housing starts. Can anyone guess how many housing starts were in 1979? 100,000, 1.29 million. 2022, 1.38. Very similar. We have a lot more people, yes. Permits. Permits are pulled. Right. Unemployment. Can anyone guess where the unemployment was? 9%? 6 million. 6 million people. 2022? It's hard finding people to work, right? We still have 6.3 million people unemployed. Manufacturing jobs. And the reason why I'm picking these were the major indicators of what was happening in 1979. Manufacturing jobs. Can anyone take a guess here? 18.6% of the economy was manufacturing. Today, we're approximately 8%. Big, significant decrease. CPI increase. Consumer Price Index increase. Anybody? 11.3%, 4.8. So we're seeing a massive drop in the Consumer Price Index. GDP, 3.2% growth. Now we're at minus 3.4%. This is another significant drop. And then the debt to GDP. Any guesses on this one? Approximately 35%. We're now at a whopping 133%. So the reason, a lot of different reasons. In my opinion, this is the sole reason we're not in a recession right now. Now, the most important comparison, the Olympics. 1980, my favorite movie of all time, favorite event, Miracle on Ice. But unfortunately, we got a quarterfinal loss this year of the United States. So that's the comparisons that I saw. And when I was looking at all this, it was like, this is incredibly staggering information comparatively to our last major recession. So what will be the impact on real estate? That's the big question. Now, a lot of times what I'm hearing in the news is that it's the best time to buy. Buy now, because interest rates are low, they're going to be going up. And there's that underlying current and talk. But I think there's going to be a major correction. Now, there's going to be different markets across the United States that are impacted differently. But I don't think we're going to be like this back in the right before the Dust Bowls and all those sorts of things. But there is going to be an opportunity. We're going to see a massive opportunity again. Whenever there's a major correction, there's an opportunity. The last time this happened was in 08-09. I had the premonition that there was going to be a major correction. And we were doing a lot of single family at that point in time. We were doing a lot of also some multifamily. And I began selling off my single family assets. And I was actually criticized by the local developers that I was undercutting the market because I was selling them for $100,000 below market. Now, grant, the homes were trading for anywhere from $1.5 million to $3.5 million. So $100,000 to me was not as important as opposed to getting out. So when 08 and 09 came, I only had 2 properties left. One was $2.5 million and one was $3.5 million. And we were able to move them out. But there's going to be a massive opportunity in terms of what the new product is going to be. What are the new things? And what we did is we also restructured our company. We went from a speculative home builder, we went to more design build, and we expanded into commercial. We altered the way in which we did business in order to continue to do business. And we've never turned a property over to the lenders. So what can we do? This is the most important part of what we can do. And the thing that the retreat that I was on was about transformation. And I really appreciated what Ryan was talking about in terms of transformation. I think that if you really want to get me talking on a topic, that is the heart of it. And that's why I began talking about what is going on here, because we have to look at what we can do. There's the before and the after in terms of how we approach things. Okay? And what we have done, I have moved my entire company to self-storage. So I began in multifamily. My background was, when I was getting my master's degree in architecture, my professor I was a TA for him, and he hired me. And so my first real estate negotiations, he told me as the TA I had to work in his office for free for 20 hours. And I said, well, after 20 hours, then you have to pay me, because that's what my contract is, to be the TA. So he agreed to that, and so that was my first negotiations. But the first project we worked on was a $100 million project. It was 316 condominiums, 64 townhomes, and 16 single-family homes. And I was responsible for doing all of the financial analysis of that project, because my undergraduate was in history, and everybody else that was working for him was an architect, going through architecture school. So I was the only one who could really read and write. So I was focusing on the development side of things, and everybody else was drawing. But in class, that was my design that we were developing. So I got to see both of the formulas and create the performas and all those different things in order to get the whole project going. But that allowed me to really understand the business side of development versus just the architecture side of things. And so as we began our company when I was the ripe old age of 28 years old, I thought I knew it. We began as a design, build, development, and construction company. And so we began in single family, we went into multifamily, we went into commercial, mixed use, all those different products. But then the crash came in 08-09, and everybody was being pushed into apartments, because that was the only thing that was being lended on right now. And I saw a massive cap compression within the apartment market, and I had a client, I was doing coaching, and they said, can you help me find a distressed self-storage? And in the midst of the Great Recession, I could not find a distressed self-storage facility. So I began to understand, I began to research, I began to look into what this product was. And to me, I'm a developer. So I'm selling property, I'm looking how to improve property, right? And then to me, there's no difference between an apartment building and a self-storage facility other than I have tenants that don't have toilets. I don't have toilets, I don't have sinks, and I can evict, I can move them very quickly. It is a retail business, but it is a more simplistic version of an apartment building. Fair enough? But what I saw was the fact that it was incredibly recessionary resistant. And so, so here's the transformation. We choose, this is our company motto, we choose to transform, for if we don't, we die. The Navy SEALs have a much cooler one, but I didn't want to take theirs, so you know, that was what we went after. But this is what we began looking at. I began studying, this is the recession, this is the GDP, this is the pandemic. You can see how far it dropped. But what's up here is the rentals, over 90, close to 90% occupancy in every major recession in self-storage. To me, this is an powerful asset class because ultimately what self-storage is trying to do is trying to help people through difficult periods of their life. It could be divorce, it could be a death, it could be a dislocation, it could be a move. Whatever it may be, you're helping people through a difficult time because they don't have the time or the energy to address the larger issue in their life, and so they're packing away their stuff and putting it in a box so that they can address it at a later point in time. That's why we were deemed essential during the pandemic. And a lot of our other competitors wanted to close during that period of time, but that's where I said yesterday, we rushed into it and we said, hey, how do we keep open? How do we help people during this period of time? And so, true enough, in terms of the pandemic right now, self-storage has increased in occupancy because why? People are now using their homes differently. They're now a gym, they're now an office, they're now a school, they're now whatever it may be, and people realize that they need more space. It's a viable economical interest to how they perform and how they handle their business. So what we do is we take underperforming commercial buildings and we convert them into self-storage. And the reason why we do that is because we're able to buy these buildings well below replacement costs. So we get a massive competitive advantage in terms of a new construction. I'm buying buildings for $10, $12, $15 a square foot, and then we're putting $40 a square foot into them, so my cost basis is a lot lower than my competitors. So that way when I do a lease up, I don't have the financial pressure to match up to a new facility that is $20 million where mine is $10 million. I can get 500 rental lockers, 500 units. You know, we did 400 units and it was $100 million in sales. I have 500 units and my facility might be worth $10 million. So I have a lot less exposure, I have a lot more mobility within the product type because of the fact that I can change the lockers. I can take a 10 by 10 and make it a 10 by 20 by removing a little metal wall, and then I can change it based upon what the demand is. So for me, the whole process is that we adjusted our business model. And I'm not saying that, you know, self-storage is the only way to make money in this environment. There's going to be other ways. In terms of, I think crypto is going to be a huge component of this because of the fact that there's going to be other sources of funds, there's going to be other things, but it's going to be setting up your business to get it into the right position to know what to buy and having the underwriting skills necessary to make sure that whatever product you're going after, whether it's single family, multifamily, commercial, even retail. I think retail's changing dramatically. I think retail's undergoing a massive transformation right now, that you begin to look at what are going to be the new opportunities, how to understand the underwriting of them, and making sure that you're positioning your company to be coming down what's coming down the pipeline. I do believe that we're going to have a recession before the midterm elections. That's my prediction. I'm not an economist, I told you right up front. I'm not trying to state anything more than what we are, but in the past, every single time that I saw something coming down the pipeline, and I'm not saying that I'm a guru or I have a conduit directly into, you know, the God component of the economy. That is not me. But there's a soft undertone in the news which will be talking about something while the vast bigger noise is talking about how great things are going right now. And that's what I listen to. I listen to the softer voices. That's the thing that the those weekends taught me is when we have silence and solitude is to listen to the quiet voice, not the loud voice. And so I'm not trying to be the big gong hero or the Debbie Downer. I know this is a tough topic, but I thought that this is where the greatest wealth is created, because you generate your wealth in real estate on the buy, not on the sell. So if you have the opportunity to position yourself for the buy, you'll have great opportunity in this market. Does that make sense? So that's exactly what we're doing right now. We are repositioning our capital stack. We're repositioning, we're having conversations about how we're going to inject our company with capital in order for us to grow and expand, because in other markets, this might be a contraction period of time. We're going to see this as a major expansion period of time. Our portfolio right now is about $75 million. We just acquired a facility in Michigan. We're about to begin, we have approvals in Louisville. We're also going in for zoning entitlements in Michigan. And so we're looking how to expand. You know, we're seeing this as an opportunity of growth as opposed to holding steady. And so, you know, there are going to be opportunities in each segment of the economy. You just have to be astute to understand what those are. So with that, I would like to open up to questions. I'm sure this is a very, you know, controversial topic, and there's lots of opinions. But if anyone has any questions, I'd be happy to answer them.
You talked about recession. Every recession has some type of pain point, either artificially created or it's a systematic pain point that actually triggers that recession. Which pain point you see right now in the market that could become that caveat for that recession that you're talking about?
That's a great question, and thanks for pointing that out, because I meant to discuss that. The fact that we're printing so much money right now is injecting a lot of fuel into the economy. But because of that, we're seeing inflationary rates. And the only break the Fed has in order to tool that the Fed has to keep the growth going is keeping the interest rate down so low. We've been at a historic low for longer than any other period of time in history. And so they're going to have to begin raising interest rates. And when we begin raising interest rates, people can't afford as much. And the bigger thing is that, you know, Greg was touching on it yesterday. A lot of these products, commercial products and residential products, are based upon a debt coverage ratio, and they have default contingencies within it if they don't meet those. And so when the interest rates begin to climb and you have variable rate mortgages, people aren't going to be able to afford them. And so there's going to be more turnover in terms of the products. And so your options are going to be to sell or to lose the property, right? And so as a result of that, if they can't refinance them because they can't cash flow them, that's going to be the impact. Right now, so we deal a lot with opportunity zones. We really look at alternative tax strategies. So we've done historic tax credits, we've done opportunity zones, we've done PACE financing, we've done a lot of different things. So most of our investors are not just looking for the growth, they're looking for the tax shelters. And the first thing the current administration did is they cut oil local in the U.S. economy so that we had to outsource it. The next thing they began really looking at is how to alter the tax structure specifically within real estate. And capital gains was significantly on the board. And being able to invest your IRAs into real estate, invest 1031s were on the chopping block, you know, opportunity zones, which was actually created during the Biden administration, but actually implemented in the Trump administration. And I was really surprised that he was going to go after that as well, because of the fact that that was created in his cabinet under Obama. And so that one did not get as much news about it. But if you think about it, if you take away, right now our economy is spurred by real estate. I mean, we have growth, we have housing, we have construction. If you take away that, you suppress that growth because of real estate, that's going to impact our economy. We don't have it with oil. We don't really have it in manufacturing. We saw 8% of our growth is manufacturing. Right now, we're being driven by real estate. And so if we begin taking away that hurdle by impacting where the capital stack comes from, then people aren't going to be able to invest as much. So there's going to be a decrease in investments. Yeah.
Repositioning your capital stack You mentioned, reworking or staging, so to speak, your capital stack. Can you provide a little more detail? Does that encompass like growing your cash on hand? And are you nervous then about having cash on hand with inflation? How do you think about that?
We are making sure that we have cash reserves. That's one of the things that we're doing within that. But we're also looking at different sources. So we're looking at the debt structure, we're looking at the overall structure in terms of people that we're working with, partners that are coming in, so that way that we can have the ability to grow and to continue to grow, but more aggressively. Right now, we're bringing on 1 to 2 facilities a year, and each of these facilities is approximately 70,000 to 100,000 square feet. So when we do a major lift on them, we're buying them for $1 million, $2 million, but then we're putting like $4 million into them. But we're still significantly below replacement cost. But now what we're talking about doing is how to expand it to like 3 to 5 facilities per year. So that requires a different set of capital stack.
Sure.
Yeah.
Thank you.
What's your average unit default rate?
Not very high. The average span is about 3 years. We're everywhere from Milwaukee, Chicago, Toledo, Dayton. We'll be in Louisville, Michigan. We have Virginia and Maine. And so they're all different types of products. Our ones in Maine, people have them for like 4 or 5 years, because what they do is they live in Florida, but they have their summer house and they put all their toys in the storage facility, and we get 1 check a year from them, and that's about it. So they just use it as a way to hold their toys. So there's not a very high default rate on those. But the bigger one is, I would say right now, 50% of our tenants are commercial. They're not residential, they're commercial. And so, I think that will continue to grow because of the fact that with supply chain issues, that they're needing it. So it's a viable option for them to have that as a warehouse without having to have a warehouse. And so we don't have a very high default rate on the commercial tenants. Yeah. No, when we were doing a lot of house building, those HGTV shows drove me nuts, because my clients would say like, well, they built the house in a month. Why is it taking you 9 months? And I'm like, because this house was going to stand up and survive more than a week after I'm gone. But we do. They're not that exciting. We don't really, we do have auctions occasionally, but most of the time the items are just thrown away. The best story I've ever heard, I have a friend who has a facility out in rural Massachusetts, and he had this guy that was behind, and he kept sending him notices, and the guy finally called him up and he said, hey, here's the deal. I got a DUI. I lost my license. I can't drive. There's no public transportation. So there's a BMW 2002, not the year, the model, 2002 model, double I in the garage, in the locker. You can have it. So that's the best one I've ever heard. But that's.
So I have a second question. On your facilities that you've developed, have you ever sold the individual spaces, and similar to a condominium, and have a low HOA, but actually sold the space instead of leased it?
A locker?
Yes.
No, we've never done that. That's the reason why we don't do that is ultimately our whole strategy right now. This was the old Lincoln Log Factory. This was where we got historic tax credits. This was the first fireproof building in Milwaukee. The closest one we're going to get to is this one in Louisville. So right here, what you see is flex warehouse space, but on the back side of it is actually the self-storage. It's 150,000 square feet. So this would be the closest thing where we could condominiumize this building by separating the self-storage and then having each individual flex warehouse spaces sold. So we do have a flex warehouse space building, but the units are 1,500 square feet versus 25 square feet. And so that is a condominium. But the whole strategy of this is that we're developing this portfolio. The original goal was to develop a portfolio of $100 million and sell it to a mid-level REIT. Now what we're looking to do is grow the portfolio to $250 million, and then sell it to a major REIT for a cap compression. So we evaluate all these at like a 6 and 6.5 cap. But what we've seen is when the major REITs come in to buy these things, the cap compression is sub 5, like 4.5, 5. So we can, we're building them at a 12 cap, and if we sell them at a 6 cap, that's our goal.
We do have one in Phoenix, very close to my house, and then I just saw the second one in Scottsdale, where they're actually selling space instead of
Really?
leasing.
Okay, it's a new model. It's ever changing. There's another question back here.
Once again, my question, you were talking about acquiring properties way before replacement value and then converting them, what's your take on a market where you can't really find replacement properties below replacement value? How would you approach to that market and storage unit?
We don't have a problem finding these properties. Whoops, how do we go back? This one is in downtown Dayton. It's 3 blocks from the baseball field. This one is 3 blocks from the Toledo baseball field and ice skating rink. Finding the property is not the hard part. The hard part that we have is finding a building where the saturation of, we look at square feet of lockers per capita. So I can go in and within a minute know exactly if I should go into that market or not, because we have the software, we have the ability to do the demographic studies, which is something I never had on multifamily. It was like the field of dreams approach to building. You'd like lick your finger, hold up and feel which way the wind was blowing and like, okay. But with this, we can go and study the market to see if there's too much supply in the marketplace, and then we won't go into those markets. So what we look for is building, and then we look at the zoning, we look at the construction technique, we look at what the demographics are to determine all those different things. So
ground up is still an option?
Yeah, the one that we're doing in Michigan, it will be a ground up facility. But they won't look like this, because here, we're taking existing buildings and just converting them.
Because in Las Vegas, it's very challenging to find a replacement property
That's because Vegas is a newer market where they don't have older buildings. Each of these buildings was basically empty when we bought them. So, but there's a need for storage because of the demographics of the growth.
Quick question for you. Are you finding municipalities that are finding that they are saying there's too much storage in the area with the demographics and needs, let's say in Florida, where there's a lot of restriction as to what you can have, but the municipalities are push back saying we build it.
Florida's weird on its own. I'll just be honest with you. There's no other way of putting it. The national average of lockers per square foot of capita is 7 square feet of lockers per capita. We have been avoiding Florida, the East Coast, Texas, even the West Coast, because they were originally like at 9. I mean, they're now building in Florida where the ratio is 13. And so to me, it's way too much risk. That's where I'm looking at the market and saying, I don't want that risk, okay? So with regard to this building and this building, Toledo and Dayton both told us they didn't want storage. But here's the irony. They're both zoned for storage. So I had as of right to go in and build it, and they tried, in Dayton, they blocked us with our PACE financing. They weren't providing the PACE financing, they wouldn't sign the document to facilitate the PACE financing. So what I had to do is, they told me that they wanted retail on the first floor here. So I said, what do you want? They said a coffee shop. So I studied what a Starbucks was. It was about 1,500 square feet. And I said, fine, I'll give you 1,500 square feet for retail. My market is $15 a square foot, triple net lease. So we will market this for a year, and if no one buys it, then I'm going to convert it into self-storage. And they said, no, we want you to do 18 months, and we want you to have the rent being $4 a square foot. I'm like, hold on. If you think this is in such demand, why do I need to cut my rent by $11 a square foot in order to do something that is in such high demand? So we agreed upon 18 months at $12 a square foot. I have not gotten one offer. Because what I did, I put a listing out there with the local agent, $12 triple net lease. I've gotten one phone call, which we felt was someone who worked with the city trying to see if we would negotiate. And I said, nope, it's $12 a square foot. They're like, but I can get tenant incentives everywhere else. I'm like, great, go everywhere else. My rent, $12 a square foot. Because if I knew that if I didn't list it at $12 a square foot, they would accuse me of not negotiating in good faith. So I put it right at $12 and said, so that's coming up in 2 months. We're going to be done with it. And then I'm going to put lockers right there.
So I would just challenge you to relook at Florida, because that market, there's a couple of things you got to know. The housing is constructed differently. You don't have storage space, which you do in most other areas of the United States. And the markets that I work in, there's a 1 to 2 year waiting list to get into 90% of the school years around. So it's a thought process.
I know. Believe me, I'm very much aware of what's going on in Florida. But to give you perspective, 1.6 square feet per locker, 500,000 people. Okay? My competition is very little. 2.6, 3.5. We were at 3.7. We were close to 7, but none of it was climate controlled in our area. We're going to be the second climate controlled facility in Louisville. So that's why I like those markets, is because I have no competition. That's how we've transformed. That's how I've altered how our business does, because I'm looking for where there's inefficiencies in the marketplace, and then I'm attacking those inefficiencies.
Do you see any competition in the self-service storage industry, like the pods or the container?
That's a great question. We get this all the time. Yes, but the reason why there's competition for that, and the reason why there's a product for that, is because the underlying real estate is so ridiculously high. So we look at San Francisco. We look at other areas where the cost of the land, that I can't rent a facility. I can't rent a unit for $100, $150 a square foot and make the numbers work. And so the only way to do that is to transport the goods in and out of the location, right? But that is not a self-storage business. That's ultimately a logistics business. And so your whole business model is based upon your trucking and moving inventory rather than housing it. And so that is just not a whole model that we've gone into, because that's just a whole nother set of understanding. The closest one would be cold storage. Cold storage is even more efficient than self-storage because it's become all automated. And the aisles are down to the size of a pallet, because they're using computers and robots to go and pick up the stuff. And so there's a lot less loss of rentable square footage. Yes?
Are you doing any cold storage right now?
We are not doing cold storage right now. So that would be like, if our project's like around, call it $15 million, there's about another $15 million in technology to make it work. But there's a big demand for cold storage. It's all going automated. So they have one person working there, just like we have one person working at our buildings. Our one in Michigan, we won't have anybody working. Michigan and Maine, we don't have anybody working at those locations. All remote. It's another thing that we did during the pandemic.
Good. So I'm actually at the end of our time, but I do have stuff in the storage unit in Georgia, so I want to find out if it's yours and if you can cut me a deal. But
Sorry, I didn't hear that.
I have stuff in the storage unit in Porter, Georgia right now, so if it's yours, I want to cut you a deal, but we can talk about it after.
Sounds good. Thank you very much for your time. I hope you found value.
Okay, thank you very much, Scott. Now it's time for the Realty 2.0 Conference's exclusive awards and recognition program. Leading individuals and agencies have been making their mark in the industry and have been undeterred, even in times of economic downturns. These visionaries have always stayed ahead of the curve because of their innovative offerings and their constant focus on providing memorable customer experiences. To present the honorees with their awards, I'd like to call Jody Ruttenberg on stage. Okay, finally, the first award is an Outstanding Leadership Award for Ed Page.
Thank you. Smaller crowd than yesterday, but I'm glad that all of you are here. And thank you for all coming, all of you for coming. I've enjoyed being here. I tend to back away and be a little bit of a wallflower, but this group has been nice to meet and hear all of the stories. And I think it's the stories of other people and getting out of your own head and your own space of what's going on is one of the great values of this convention, this conference. And thank you all for telling me your stories so that I can see the world from other people's perspective. Thanks.
Okay, Hassan Chaudhry.
Thank you, everyone. I appreciate the opportunity to be here. I think in last year and a half, learning about real estate and marketing and development myself, a few things I gained is I would like to share. Back in 1960s, our industry was more like commodity driven. In 80s, it was like more service driven. And I think so now it's more like experience, commodity, and service have to be combined together in that experience. That's what's driving everything, right? So I think so from housing to storage unit facilities, it's all about creating that experience, either to live well or to invest well and to enjoy. So I think Realty 2 actually created a great experience for us. So thank you so much.
Thank you.
George Bliss.
Well, first of all, let me say how honored I am to get this award, and congratulations to all the other honorees at this conference. It has been a good conference. I agree with Ed that it's great to hear stories from other folks, from other situations, and certainly other geographies. So I look forward to the next time we all get together. Thank you.
Hicham Asim.
Okay, thank you so much. I'm really honored to be among on the stage among such honorable audience, and thank you to the organizing committee. And thank you. We'll be speaking in a couple of hours, and introduce myself. So thank you so much.
Fernando Del Fior. The Best Companies Award for Modern Realty.
Well, I'd like to just say it was an honor to have met some of you guys here and learn from different aspects of the industry, and it was a pleasure getting to experience your experiences and definitely better ourselves in the industry. And I think why we're here also, and I've been recognized as is definitely our belief system from the very start, which is God, family, and winning, and our greatest first value is definitely putting people over profit, and that's where we're here today as well. So thank you very much. It's been an honor.
Congratulations.
Lorico LLC.
I'm just going to keep it really simple and short. I want to thank Realty 2.0 for having us. This is obviously a special day for us, and I know that there's bigger and greater things to come. This is just a start, but really this award is for our leadership team, Randy and Macy, and I have worked really hard to get where we are this year, and yeah, I'm just super proud of you all, and thank you so much for having us. It's an honor. Thank you.
Congratulations.
Abundant Real Estate.
Thanks you. Hi everyone. I would like to thank Realty 2.0. This has just been so amazing. I've already shared with my team and everyone, that we did it, and it couldn't have been possible without everyone. And we have a few people from who are Ukrainian that work in our office, and so we just got to make sure that we stand in solidarity with them. Thank you. And this conference has been amazing. Met so many wonderful people. Not everyone's here. I'm trying to meet even everyone who is here, so please come up and say hi, and I'll also try to come out and reach out to you. So thank you so much. Thank you so much for this award.
Now, there are a few people that couldn't be physically here to present the awards for them, so we would like to show their videos remotely. Akil Pyant. I think we need some sound on that.
Thank you so very much for this award. Unfortunately, I was not able to make it out to Las Vegas this year. But I'm really thankful to receive this award, because every day I'm learning something new. Real estate is an industry where you are constantly trying to better yourself, trying to improve and get better. That's exactly what I'm doing. With me and my partner, we're continuing to out of the park and try to uplift each other as we go along. So I just wanted to take the time on behalf of everyone to just thank you so very much for this award. It really means a lot.
Wagner Bonato.
Hello everyone, it's a great pleasure to be here at this great world event representing the Brazilian real estate broker class. In my country, even in the face of difficulties we all face in this pandemic, we are experiencing a very prosperous moment in the real estate sector. I have been in the sector for 16 years. I started as a realtor, but in the last 5 years, I dedicate my life exclusively to training professionals, real estate brokers, real estate and construction companies, so that through guidelines and strategies based in my experience, they can increase your sales. I was fortunate to help dozens of companies in the real estate sector grow, and I am responsible for several free YouTube contents in the 37 countries. I believe that the Outstanding Leadership Award is an important recognition for anyone who is dedicated to contributing, whether it's the buyer, seller, or in my case, with those who represent real estate transaction. We are realtors. Bye.
Srikanth Petty-Boltla.
My name is Srikanth, founder of Happy Cities Labs. Thank you, Realty 2.0, for giving me this award, recognizing my efforts in doing our research and development work for designing a 15-minute walkable, pedestrian-friendly, car-free, and sustainable micro-cities, or rather a cluster of micro-cities. Pandemic-induced work from home has shown the world that decentralized urbanization is a possibility in this century, and the climate crisis is making us all think how a city moves within the city, how the city can move. And I hope that soon we will see more such concepts and ideas being very popular in urban landscape, and I hope to see more implementations of such micro-cities in the near future. Thank you so much for this award.
Shabir Hussain Khan.
Good afternoon, ladies and gentlemen. I am very much honored to be receiving the Outstanding Leadership Award tonight in the Realty 2.0 conference in Dubai. Kindly accept my sincere apology and gratitude for not being physically present in the award function. I am grateful for such an esteemed recognition for my work. At the same time, I'd like to take this opportunity to congratulate my fellow awardees and welcome all applicants who have potential to usher in the next generation of innovations and ideas in the realm of real estate and construction. I might add that serving as the CEO of Doreen and spearheading the departments came with the fair share of the challenges of the country of Bangladesh, huge experience in this industry as I'm working for 28 years. My challenges has become my potential in different paths. Proud Bangladeshi, and as a proud Bangladeshi corporate Doreen, on behalf of Doreen and on behalf of Bangladesh, my sincere gratefulness and gratitude to the organizers, to the jury board, to the selectors, to select me for this position, to think I'm suitable for this position. Due to COVID, this year, maybe like me, a lot of people cannot come personally. They are taking virtually, and I'm also a part of them. I'm taking this award virtually, but I would like to be present if the opportunity comes to me in the next time. In the real estate, I have been working for the last 28 years in Bangladesh, and I work with different conglomerates of the country who are leading this sector at this moment. So, and being a CEO of Dorian Development, I also face a lot of challenges, but Dorian Development, actually, we work on the niche market and also working on the quality construction and development. So Dorian Development can be recognized as one of the finest real estate company among top 5 of the country who does and care about the construction, design, and A to Z construction and development. And thank you very much to the organizer. Thank you very much for the event manager. Thank you very much for the team of Realty Conference Dubai for helping me in different segment of the area and choosing me for this position. And thank you very much to all.
Okay, and the final award goes to Joshua Barron. However, I don't know if we have a video for him. No video, so just a round of applause for Joshua. Okay, well, on behalf of the entire conference team, I'd like to congratulate all the honorees. Now we're going to take a short coffee break, and we'll meet back here in 15 minutes. See you then. right, now we have some more knowledge-packed sessions for you. Marketing can be a tricky job. However, to grow your market reach in real estate and construction, it's important to get it right, both online and offline. We have a marketing expert here to share insider tips on how to make it big in real estate and construction marketing. Please welcome Henry Castor, the CEO and founder of Market My Industry. The topic is marketing your ideas in the real estate and construction industry.
Oh, need the clicker. I need the clicker. There you go. How you guys doing? This is the last day of the conference. I believe there it goes. It's on now. Yes, I run a company called Market My Industry. We started in Connecticut, in Waterbury, Connecticut. And before I went ahead and started that company, I was a financial guy. You know, I had my Series 7. I was selling stocks and bonds. I worked on Wall Street. I sold merchant cash advances to business owners. And I saw the fact that if someone needs money, you know, they're going to take it, but they're more desperate, and I'm not really helping these customers. So later on my journey, I ended up working for, we all know Harley Davidson, and they're working down there in Palm Bay, Florida. And I was able to go ahead. I never had any marketing experience, and they asked me one question. They were like, if we give you the job, how will you make us better? I sat down, I wrote it on a piece of paper, and I presented it to the guy. 6 months later, we ended up being the #1 Harley Davidson in the entire country. And the way I was able to do that was going ahead and say, I use this magical thing called common sense, and I make good money on it. I use the space in between areas where no other Harley Davidson was out there marketing, and I was able to go ahead and target those areas and make sure that those clients who were reaching out for those particular, those items were able to go ahead and find them, and they did, and we did great. Which led me to go ahead and say, hey, if I could do it for them, I could do it for larger companies. So that's what I ended up doing. I created a company called Market My Industry, and when I sat down in the year 2015, and I was like, hey, I have this name, how am I able to get this name? This industry is way too new. No one knows really what they're doing. I don't know what I'm doing. We're all figuring it out, because marketing to me equals money. All of our clients are hiring us for one thing, whether it's email marketing, whether it's brochures, whether it's print marketing, no matter what it is, at the end of the day, you real estate agents and every other type of business I deal with, you're looking for an actual return on your investment. So that's what I focus on. I focus on making you money, because if you can't pay me, you don't want me, and I don't want to be around you when you're mad at me. So I'm here talking about the marketing ideas in real estate in the construction industry. And the first thing you want to do is you need a plan. Most people just jump right into marketing, and I'm one of the guys as well that I've done it as well, where you just jump in, you don't have anything stretched, put out, or you have a kind of a makeshift plan put together. No, you really need to know who your client base is. In this type of industry, especially real estate, you need to know who you're targeting, how your demographics are. Are you relating to your demographics when talking to your customers and presenting yourself on YouTube or on social media platforms or even on Google? Are you delivering the right message, and how do we go about making that plan so we can deliver that right message? Lovely, I messed that up. Beautiful. So, what does a strategic marketing plan require? An accurate understanding of the market. Like I said before, you have to know where you are, what they want. To sit there and say that, hey, I'm going to go ahead and try to find, business owners. I'm trying to go ahead and find homeowners who have an average income of, let's say, $300,000 a year or plus, but you're in a place that per capita income is only $28,000. You're completely wrong. You're not even in the right field where you need to be at. You need to make sure that you have a plan that's structured around the realities of where you are. And then secondly, a willingness to shape and bend the industry and its ups and downs, targeting customers right where they are in your area. That's more or less of what I kind of went over. The plan breaks down kind of like this. The acknowledgement of your clients' needs, wants, and understanding their market. You have to pay attention to what your clients and what the area is saying. I keep on stressing, I can't stress this enough. When you are putting a marketing plan together, you want to make sure that the client that you're looking for is a client that is looking for you as well. This spans onto every single aspect of marketing there is, and every type of industry. We focus on so many different industries where we go from the doctor's office to the lawyer's office to the real estate agents, the whole 9 yards. But the one thing we see that most businesses are not doing and most businesses should be doing is finding a way to relate to their customers. And when I was a sales guy, the main thing I would like to do is I would like my customers to realize that I want you to feel like I'm your cousin, your friend, your brother, your sister, that you can trust me. And those need to be displayed in the same advertisements that are being pushed out there to the general public so they can go ahead and feel more warm and more of a good feeling to go ahead and do business with you. Next, identifying the competitive advantages. What are the best parts of your campaign? What are the best parts of your particular area, and how can you expand on that? Some areas that aren't so stringent and as far as capital gains and giving the best things to their environment. They do have benefits, but once again it comes down to the actual person you are targeting. If you're targeting the right customer in the right area, they will find the benefits of what you are bringing to the table. And then also retargeting through multiple platforms. This is what we live and breathe and die on. And that's any sales aspect. When I was on the phones, it was the same things. You jump on the phone, you call again, and you call again until they hang up the phone. And it's the same aspect in this. What we do at Market My Industry, we strictly focus on geo-targeting to a sense to where we're almost brainwashing our customers. We go ahead and attack on different variables to find out what works the best. So we don't care. We'll hit you on Google. We'll hit you on social media, yes, and we'll go ahead and shoot ads to you on YouTube. But the same aspect, that same group of people that we targeted from the beginning, we're going to go ahead and hit you on billboards, Spotify, Pandora, TV, the direct mailers, because you're going to continuously see us until you want to, God, stop. And we find out that whether or not they go ahead and make a complete decision with you, we find it more times than not that they're going to make a decision with somebody because it's implanted into their brain and we're finding the right clients. It all comes down to putting the message from the right people and continuously delivering it to them till they make a decision, yes or no. And then collect the data. Because from that data, you'll know which of your variables are working. Is it the billboards? Is it the social media? Is it the YouTube? Is it Google? When you get that data, you'll know where to go ahead and focus your actual capital and go ahead and put more money to that. But don't let those other ones die. Run them for a little while. See, maybe we do better in the winter on billboards because people are just stuck in traffic and we live in Chicago. Or we do better on TV in South Florida because we're selling, we're reaching out to an older generation who more so watches TV, so I can go ahead and run ads. All depends on what works. And the only way you're going to find that out is by running those tests. Oopsie, oh, that's the wrong one. There we go. Understanding your target audience. Everybody wants to buy a house. We get that. Yes, everybody wants to run a business. Everybody wants to go ahead and do that. We get that part. But when advertising to these certain groups, I promise you the advertisement has to be completely different for each sector of these groups. And the groups even break down even more down to race, age, and the whole 9 yards. Because the advertisement, like I said before, it needs to feel personal. It needs to feel like something that I can relate to, I feel okay with. I want to go with this real estate agent. I want to go with this company because they remind me of my cousin Joe and I trust him. That's more or less the whole 9 yards with that one. So this is part of our plan here at Market My Industry. Like I said, we have this thing and we call it the escalation plan. Obviously, it differs for different businesses, but breaks down like this. It's the geo-targeting with the geo-fencing, social media, digital billboards, internet radio, local TV, and direct mailers, all focused in one particular area, going through different phases of the business growth. In that, we focus, like I told you, heavily on geo-targeting and geo-fencing. For you guys who don't know what geo-targeting and geo-fencing is, eventually you're going to find out. Because since I've been here for the last 3 days, I put in a geo-fence in this entire convention. So over the course of the next couple of days, you're going to start seeing my ads on your phones. You're going to start seeing my ads on your TV. You're going to start seeing my ads, and you're going to hear me everywhere. And the reason I do that is so you guys have an idea of how it works. And the way it can correlate to your type of industry is some of you guys have real estate offices, real estate brokerages. And I know since COVID, not so many customers are walking through the door like, hey, let me go ahead and have good communication with my real estate agent, but they still are. And when they do walk in, you can tag them. Because we're not in the business of, I come in and I want to purchase right now. It's over the course of time. They're shopping. They're going to different agents. They're talking this here and there. Why not choose us? So once they walk in, you tag them and you keep on with the brainwashing. And the geofencing helps you do that. We can target areas as well. We can target conventions. We can target, if you're looking for an older crowd and you want them to go ahead and sell their properties, you can go ahead and target, let's say, a Century Village like we have down there with a 55 and plus community, and target ads just for that particular set of group of individuals. And obviously, then we have social media. Don't really have to go so much into that. Social media is its own beast in itself. You have to do it. I'm a marketing company, and I hate to do it myself because I do it so much for other people. But in the same aspect, you need to get it done. You need to have posts out there. You need to be consistent. You need to show, once again, that relatability. Oh, that's that. There we go. The next set of thing is the radio marketing. And it's not just your driving your car radio marketing. This is the things that most people are listening to right now, which is the Spotifys, the iHeartRadios, the Pandoras, the TuneIns, the Cox Media, and the Intervisions. Things of those like that I have it on my phone. I keep my ear pod in my ear, and half the time I'm listening to it, not paying attention to nobody. But that's what I'm doing. And most people are doing that too, listening to podcasts. Those are another chance for you to go ahead and put your ad in front of your customer and get them to go ahead and say, you know what? Not yet? Okay, I got you. You don't want to pick the button yet? I got you when you walked into my office. I got you when you listened to music. But now, okay, I'm going to go ahead and because you clicked on it for a second, you put your name in there, I'm going to send you emails and I'm going to send you text messages. I'm not going to be annoying, of course. I'm not going to call you send you a message at 12 o'clock at night. But I'm going to send you a strategic timing, strategic headlines, and strategic offers that make you want to get more enticed because you showed me, by the time that I come here, you showed me that you had an interest. You just haven't pulled the trigger yet. My job is to make sure that you pull the trigger. My job is to make sure my clients are happy. So I'm going to try that aspect. And if it's still you haven't made a decision, you're going to be driving in your car and you're going to see us. You're going to see that ad. You're going to go to the mall, you're going to see the ad. You're going to go to your doctor's office. You're going to be sitting at your local bar and you're going to see the ad. Like, why does this keep on coming? Why do I keep on seeing it? And how do I get this information? And then lastly, I do direct mailers. This is for the last people who haven't, they want something in their hand they want to touch. It's not dead. Believe it or not, it's more dead for a generation from like 30 and plus. We don't even take those things, we throw it away. But you wouldn't believe the statistics I found out that a crowd from 18 to 25 actually reads mailers. And they use them. It's crazy. And they work. So once again, it comes down to who are you targeting, what's your age group. I have this thing I call EARS. Execute, adjust, retarget, sales. So from the very beginning, right after you made your plan, you need to go ahead and execute that plan. Once you execute that plan, it needs to be adjusted because we're not perfect. There are mistakes. There's always mistakes. So if you have a marketer who says, yes, I just ran these campaigns for you, they're good, and they haven't called you the next following week, fire them. Because adjustments need to be made. They grab stats. They need to know your stats. That's another thing. When I walk in, when I talk to a customer, the very first thing I want to go ahead and do is, especially if they've been around for a little bit, how have you guys done before? Who are your clients? And what is the whole setup of what they're looking for? And when I get that information, it better suits me to go ahead and make a proper plan. It doesn't work more so for the new agent or the new business, but it does work for the guy who has that data that I can work off of. If they're not asking for that, they need that. Then they compare it with your competitors out there, and they go ahead and make a formulated plan that really needs to go ahead and go out there. Then you want to, once again, is retarget, retarget, retarget. That's the whole thing about marketing. Marketing is just retargeting. It's the repetitive notation of, hey, I'm in your face, click me. Hey, I'm in your face, click me. And then sales. That's what we're all here for. That's what I'm here for. I don't sugarcoat nothing. I'm not an angel. I want to make you money, yes, because I want you to keep on paying me. And that's what it breaks down to. And if any marketer doesn't have that in their mind, whether it doesn't care what variation of marketing they're doing, the end result is to make you guys either gain more properties or get more sales, which eventually leads to getting more capital in your actual business. and growing your firm. So, like I said, this is my information right here for Market My Industry. I have to be quick because I have to go next door and tell the marketers that they need to do some stuff. But if anybody has any questions, please, feel free. Yes.
So your business applies to any, your marketing business applies to any kind of business that needs some kind of advertising online?
Yes, but we more so adjust it based on you.
I like that.
And it's not just based on the industry. It's literally based on you, your individual company, because there's no real estate brokerage that is the same. Every single one of them is different. You guys can literally be doing business in the same area, and it's not the same, you know, so. Testing.
I was going to say, so if you also probably hear that sort of thing with growth, brand, dollars, this, scalability or anything like that, you have specific programs that can work you through to find out what you actually need as a business owner?
No, definitely. But the way we see it, the programs are designed, obviously, I want to make sure that you guys get what you want. If you want growth, if you want brand, the whole 9 yards, I'm a guy that breaks it down to the very bare minimum. When you say brand, I hear money. When you say growth, I hear money. When you say any of these variations, I hear that you are looking to go ahead and grow with capital. Because my job is to make sure that you can keep on running your business and keep on paying me. And that's what it comes down to. So yes, I'm gonna go ahead and build your brand based on how you want it to be built, but I'm gonna go ahead and give suggestions, because I tell my customers all the time, because business owners some of the business owners have been around for a long time. And they believe they got the whole entire thing under the spiel and the whole rap. Then I tell them, why are you hiring me? If you believe you understand the entire key of marketing, why are you hiring me? The same way, why would you go and, yes, you can do your taxes, but why hire an accountant? Let the accountant do his job. And if I'm not doing my job and you're not happy with the results, talk to me and fire me. I don't care. I'm happy with that. Lets me know, how can I build? Because in my company, we don't have losses, we just have lessons. We learn from our failures, and we grow from our failures, and we want to do better within our company and for your company. Yes.
Good question for you. What do you do? How do you deal with, in my position, I'm bringing the company in the electronic world, a large real estate company, bought a very boutique company. Everybody in the company is paper and pencil. So how do I merge them together using some of your techniques and a company like yours?
I'm gonna actually repeat that one more time because I had a little hard time hearing you.
How would you work with me in the aspect of working with the team that is not digital?
That is not
I'm the digital partner.
Okay.
Bringing them to the new world. And 25 of the workers, paper and pencil.
Well, the best way you do that, that's more of a, you have to deal with the back end first. A lot of times when I deal with a lot of business owners, I find that they don't even need me yet. I'm actually the second to last step before they actually make money. And when it comes back to their back office, because I've worked with business owners left and right since the time I was 17 years old, the problem right there is changing the culture within your business. It's saying that, hey, listen, I understand that we don't have this digital age, but we're going to put the pens and paper away slowly and effectively put CRMs in that place. Get them ready for the digital time so they can go ahead and handle those different types of the program that you want to install. And then you call somebody like me. And then what I will go ahead and do is be able to facilitate sales where your people can actually move through the systems, create funnels, create things of that nature that makes it more flexible. But if they have no idea what I'm even trying to do, a lead comes in and they don't even know how to move it, they don't know how to move it through the system, they don't know how they have to give the follow-up emails, there's only so much I could do, which will eventually make me fail as well. I want you to succeed and I want you to do better, so I always tell somebody, no, I will. I want your business, I want you to do marketing, and I'll look at your business, the whole aspect, and I'll be like, listen, fix your back end first, then call me. I hope that answers your question.
Yeah, I was gonna say, I'm kind of with his staff. I'm like, why isn't his Facebook and his fax number up there?
Oh, it is. Scan the code.
I just think of the pieces of a puzzle. I wasn't sure what they were. Who's next?
Anybody?
Yeah.
All right, guys.
But I was gonna say, but you do all the social media stuff.
I do all
That's what-
social media. I do the whole 9 yards. But like I was saying before, and I don't know if I mentioned that not all social media, you need all social media. If your target audience is Facebook, then stay on Facebook. If it's Instagram, stay on Instagram. You know, it always boils down to who is your client. What do you want? How do you want, how do you see your perfect client? If they walk through your door, and that perfect client is what you need to attack every single time, over and over and over again. Thank you, guys.
Thank you so much.
Okay, great, everyone. So now let's change track to talk about the problematic image of construction. Over the past decade, the construction industry has made significant progress to improve its image, but there's still a long way to go. To enlighten us about the way forward, we have with us Bill Truex, who is the Florida Certified Master Builder at Truex Preferred Construction. The topic he's speaking on is Improving the Image of Construction, Challenging Stereotypes.
Good. Almost. Try that again. Company where the market is weird. Slightly different than maybe nationwide right now. And one of the things that the construction industry and those that are providing services. And across the country, we've seen a number of issues in the lack. Question very important, also important, but the construction. I started when I was 10 years old. I decided not to play baseball. I didn't realize at the age of 10 that I would be doing this. Worked on all kinds of, okay, there we go. Worked on all kinds of microwave radio towers all across the Midwest. And I knew that I probably didn't want to do that all my life because that is dangerous, which is one of the other stereotypes. It's fact. It can be very dangerous. But the fact that there is a future in construction and money could be made in it is very obvious. And I think a lot of people in this room really get that because you're dealing with, whether you're in real estate or you're in construction, you're in architecture, or you're in investments in multifamily properties or whatever, you have an idea of what construction is necessary, why it's necessary, excuse me. Boring, hot, and dangerous. Boring and hot, yes and no. It's hot in Florida, it's not hot everywhere, and sometimes it's freezing cold outside. So there are some things here that you're gonna say, oh yeah, that's true. The dangerous part though has been changed quite a bit. When I worked for AT&T and I worked 350 feet, 400 feet in the air, my safety harness didn't exist, they didn't have them. I had a tool belt and I had a strap. And now you know with OSHA 1926, you have a lot of different requirements to make certain that you're safe. So the industry has gotten safer and safer every single year. Number 3, male-dominated industry. Still true. But it's changing very rapidly. There are more and more women construction managers, more and more owners, more and more licensed people, and they're actually very, very good to deal with. Trying to diversify a company is really important when it comes to getting rid of stereotypes. And I will tell you that I have tried and tried. I'm just now getting more women into my business, which is good. And the last one is it's for the uneducated and the unskilled. So are these stereotypes fact or myth? They're both, right? I've already kind of mentioned that. One of the things that's really, really important is that in my world, it's important to be professional, it's important to get certifications, it's important to continue to learn so that you can bring a level of professionalism and remove some of these stereotypes. In Florida, we have a lot of problems with fraud. And that's not good for our industry. The stereotype in Florida tends to lead a little bit more towards, and this is those were national numbers, but it tends to be a lot about fraud where we have people moving into our state, they get a license, and the next thing you know, they're taking somebody's money because they don't understand the business and they don't understand the cost of construction. But construction is extremely necessary for our society to survive, right? This quote here, which I'm going to let you read, I'm not going to read it to you, but at the end there it says, progress and construction go hand in hand. We can't have one without the other. Our society, our economy, and our culture are all dependent upon the construction industry. Where would we sleep? Where would we have our businesses? Where would we go to school? Where would we manufacture? Even though manufacturing is down to 8%, where would we do these things, right? In society today, we have the no-growthers that come out and say we don't need construction. They don't need it in their backyard. Well, I think everybody in this room is very aware of the housing crisis across the country. We're over 1 million units short of our current need. We are not building to the levels that we were building at in the past. We need construction, but we need to professionalize the industry more and more every day. You look at this house, and I'm sorry that picture didn't come out as well as I wanted, but that house is not built by people without skills. That's an all-concrete construction house. Those railings are handmade. Interior part of it, which I'm not allowed to show because as an attorney, and he doesn't want me to show his house to anybody on the inside. But it is something that is done with people of skill. And unfortunately, we don't have the same numbers of people with skill in the trades coming into it. The stereotype is that you need to go to college. That's fine, you can still go to college if you want to. But there's so many people that can't get through college, can't afford college. They need to come out right now and go to work after high school. I'll tell you a problem with that one though. I hired a kid right out of high school. He was dynamic. He played football in high school. I figured he had a work ethic. He didn't make his 90 days. It's unfortunate. The work ethic has to be taught. We have to train. I look at myself and my team as part of that failure. But coaching didn't seem to work. And unfortunately, I'm back to square one on trying to bring younger people in and working on that now. We have to work with them. I'm in part of a program in Florida called the Future Builders of America. And we do a camp every year where we bring them in and we teach them skills. But part of the skills we teach them are life skills. How to sit down and eat at a formal table. How to balance a checkbook. We start talking about money and how you need to save money to be able to grow a business and why it's important that if you want to own your own business when you get out into this trade, you don't waste your money. You don't work Monday, get a check on Friday, and spend it all on the weekend. So construction is not about qualifications. And in my world, and Randy talked about team yesterday and leadership. Leadership, at times you feel very alone. Well, building my company, there were times I felt very alone. And it's not about, when you work for my company, it's not about what you know. It's about whether or not you fit my family. Because I put my lifeblood and my heart into my company. It's my everyday thing. And that's the only person or entity I spend more time with than my wife. So they've got to know how to interact. They've got to know how to be part of a team and work together. And then we coach them further so that they can be professional with the clients, because every single person in our country touches our clients at one point or another. And I'm very fortunate to say I've never gotten a complaint on one of my employees when they've worked for someone at someone's home. I don't know what happened to this picture. The preconceptions in construction industry have been created over a number of years, whether it's the male-dominated or the generally unskilled environment and that it's unsafe. The preconceptions have been hard to shake, and they're still hard to shake, but it's not the whole story. The preconceptions are being challenged throughout the industry, with most organizations actively implementing diversity policies to support the recruitment of individuals from all backgrounds. When I worked for AT&T, I was on a tower crew, and there were 2 females on that crew in 1986. That's a pretty big deal. One African American and one white female. They were part of the team. They worked well with the guys. Quite frankly, these aren't coming up right, sorry. Quite frankly, they, the one gal particularly carried the weight of many. She was very good on the tower. She was a very strong worker, very good ethics. And we have to understand that might have been in 1986, but we haven't moved that far along, and yet more and more people are getting in the industry. This is my key team player right here. My number one person in my office is Michelle. She was not my first hire. Her husband was my first hire. And you'll see him here. No, you're not. Anyway, I hired Paul. He was, I had built their house when I worked for another builder, and then I started this company. And I hired Paul to come into my company and learn more about running the business and working, behind the scenes. And he started just doing permitting stuff. Then he went into doing estimating with me, and then he went to where he took that over. So it's coaching, and it's training, and it's teaching. His background, no college education. He had a roofing business in Michigan, and he was working at Home Depot in contractor sales. But he's a team player, and he was willing to learn. He's my longest standing employee, and he makes $75,000 a year. I really want to go back, but Michelle is my controller. And after I hired Michelle, and she helped me get the business side of the business tight. I have cash flow reports every week. In fact, I've already been studying mine for this week. I have the sales numbers. I have the construction projects in progress numbers. Everything is to a T. I'm trying to make her life easier by creating a dashboard. So I'm bringing in a contract company to help create a dashboard to make her life easier as I grow the business, and I'll get to that. But one of the things that we do in our office, my company's mission is to build dreams and relationships. And the mission statement comes in as we will be known for doing the right thing for our customers, our subcontractors, our suppliers, and our community. Because for me, it's most important to give back to the community that's feeding my family. It's very important to be engaged. How do you do that? Well, you get involved with some nonprofits. We've built a couple of Habitat for Humanity houses in 7 days. I know you don't want to normally do that. The slab's poured, the infrastructure's already in place, and then we frame the walls and put the roof trusses on and all that stuff and finish it out. And yes, we work about 12 to 14 hours a day to get that done in a 7-day period. But we're assisting in the community, and my trade contractors and myself, we provide all the labor for free. The typical construction site, people groan about. When the equipment shows up on site and you have a loader coming in to clear and take trees out and do all this stuff, they really aren't happy about that because they know it's going to be dirty and dusty and create problems for them. So one of the things that we do is we send a letter out, and we also knock on doors around the neighborhood. We go to them and say, hey, here's my superintendent, say, this is my card. You see anything, have any issues, don't worry about anything, just call me, I'll take care of it. So when a trade contractor shows up on the job and turns the music up too loud, which is a violation of our policies, we get those phone calls and we take care of it. And whether it's getting the silt fence up properly so that you're not having the dust as bad or what have you, all the steps we take to reach out to them helps to professionalize the industry, our image, and shows that we're going to be a proper community engager to solve problems before they start, hopefully. And while you can't change the negative side effects of construction, you can minimize them just with some of those ideas I'm throwing out there. Additionally, by becoming more aware of the day-to-day activities of construction sites, people can become more familiar. So what do? We show them, we let them come over to the property, we walk them through the property, they're interested to see what's going on. We ask them not to do that by themselves, they still do, but we have safety issues on the site, and of course we want them to be able to see it and explain to them what's going on. But some other things we've done is we use drone footage, and they love drone footage. A basic idea to just make friends is huge. It's huge in our construction industry, and we utilize it every single day, and it also leads to sales. It's one of the things that's helped us get additional jobs. And then through all these interactions, it'll help build an understanding of what construction does and why. It'll generate interest in the field, and again, some of the negative influences go away, and the construction site becomes more of a friendly place for them, and we become their friends. So how do you get involved in the community? You appoint a liaison. You have a point person. Their key thing is to, one of their key things, obviously, is to go out and figure out where our industry needs assistance, where we can help train people, whether it's the young kids, whether it's going out and reaching out into the community with Habitat for Humanity, whether it's the Center of Abuse and Rape Emergencies or Fred Lang Foundation, which we're involved in, which is for behavioral health issues, substance abuse, and mental health care. We picked some of these things because they're very needed in our community, but they're also rewarding to be involved in, and my team enjoys being known for, again, doing the right thing. Create publications to highlight progress and feature employees in those. We do that. Again, the drone footage. Be sure to detail progress and call attention to any major disruptions construction may cause. Extremely important, again. Remind employees that they're a representative, not just to the company, but the industry as a whole. They have to understand that our image can be tainted by their actions, not just the company, again, the industry as a whole. Always be respectful, engage, answer questions when people are asking about what's next and when do you have the concrete trucks coming in and when's that crane coming. We just got into modular buildings. Modular buildings are something to speed up the delivery of a product, obviously, and right now it's necessary for some people to go that route. Brings on a whole another challenge. The disruption, particularly on this island community we're going to be setting this first one on, the roads are tight. They're going to have to be blocked off. We're going to have to engage law enforcement, let them know what's going on, and we're going to have to go around and talk to the neighbors and say, here's the date that this is coming. We just want you to be aware of it. We'll have everything set. We'll show them on a map how we're going to set things up, and that way they can avoid where we're going to be, and we shouldn't disrupt their life too much. And again, I talked about offering tours of the site when it's safe to do so. That's something that's really important. Again, Habitat for Humanity. I get involved in panel discussions a lot of times and active in professional organizations. So I'm on the board for the National Association of Home Builders. I'm a past president of the Florida Home Builders Association. And with that brings, it's not just a status thing. I know people think that. It really has brought a lot of knowledge to me from people from around the state and around the country. To get on a national call with folks that do things way different than us gives us an opportunity to evaluate where their methods may benefit our company. Again, learning, making us more professional, reaching out, showing that it's important. This is a copy of the letter that we send out. If we know their name goes on there, not dear neighbor. But anyway, we let them know that we're going to be here. We let them know we're coming into their area. We let them know that we're going to be disrupting their world for a while. And some of the houses we build take 2 years. The last one we finished up that was 2 years, well, it was just under 2 years of construction time, was a 13,500 square foot house. This other is job site rules. We post those rules. I put the fine in on cleaning up after them because when I worked for another builder, I spent 13 hours one week cleaning up trash. And I went back to him and I said, you've got to do something about these guys not cleaning up after themselves. I don't have time for this. He said, well, you get paid no matter what. I said, that's 13 hours I have to make up. And the job sites look terrible, and the neighbors don't like it, and it makes us look like crap. He didn't care. That was one of the final straws that said to me, I need to go do my own thing, right? Community involvement and engagement, again, I'm going to get into salaries here and some other things, but I want to reach out more to the schools. I've done that with the trade, the teachers in the trade schools. I've reached out to them about who do you have that would be a good candidate to come into a company that has an interest. I'm not just looking for somebody who says, I need a job. I'm looking for somebody who says, I want to own a company someday. That's the people that I want because I want to help train them and bring them through the process and get them established. If they want to go to school, I've offered to pay for it. I think it's important that we be the right mentors and leaders for our industry, and that's another avenue by which we can become more professional and do a better job. Visiting career fairs, we just unfortunately had one this week. I'm not there. And I like to do it myself. I could send somebody, but I like to go myself because I like to meet these kids. When I hire anybody again, I want to know them. I want to be able to look in their eye and get a good feeling for them. And I really, if I'm meeting somebody at a job fair, I want to know that I want to invite them to my office to come and sit down and have a chat, right? But we've got to mentor these kids and anybody, actually. I don't care if they're coming back from the military. Great avenue for people. In fact, 4 of my employees are former military people. They have been great employees. You can read the other things that are up there, but construction is a lucrative career. You take a guy out of high school who did not have, when he moved to Florida, he didn't have a job. And Paul, he has been tremendous. I don't think he ever saw the potential that he had. And for him to be making $75,000 a year doing what he's doing without a college degree is pretty good. It's way above the average income in our area by about $40,000. His wife makes the same kind of money, just so you know. And they are well worth it. And then I benefit them out at the end of the year with incentives, so they get bonuses. Everybody in my company, we do well, they do well. They all get more money, and when they get more money, they carry the message beyond what I even can carry it. So it's very important to establish the right environment in your country, in your company, so that when you're working with your people, they see the pride that you have in them, and by them understanding the pride that you have in them, they'll carry that pride out there, and they will be that way within the community. They will be more professional. You just heard about marketing, web presence. I don't need to really talk about that, but I will tell you that going with a contract person is a good idea. I've hired a contract person to assist my in-house person. We respond directly to inquiries. We don't have a bot set up. And I don't want a bot. We want to be able to reach out to them in a personal manner, whether it's through a phone call, if they leave us a phone number, or a direct email, or what have you. We want to reach out to them. But we established this about 3 months ago. So I'm kind of new to really getting engaged in this, but I'll explain more of that further. But this presence across the board is something that's made a huge difference already. We're getting more and more people following us and understanding what we do, because when we did a resort renovation project with 13 buildings, everybody thought we went to commercial only. And then we go back over, we build these big houses, and they say, well, you only build houses. No, we don't just build big houses. We do restaurants, we do renovation work, we're certified in carbon fiber, we're doing modular construction, and we're moving into the development world here in the next short period of time. Actually, I'll be in Ohio next week for that. That's our website. Our summary: by rebranding construction, we can attract new talent. By explaining to people how important the environment is in the construction industry, I think we can bring more people into it. By understanding that you can be more than a bricklayer or a block mason or a concrete person, a flat works guy. One of my guys that I hired, my concrete guy, came to me and said, Travis is wasting his talent here. He doesn't need to stay in concrete. He needs to move on. Would you hire him? I hired Travis. Travis came to work for me. He's a heck of a laborer, number one, but then he got into some trouble. He started disappearing from work. He got on drugs, and we had to fire him. He came back a year later, and he said, would you give me another chance? I cleaned myself up. I said, start next Monday. He's been with me for now back on payroll for 5 years. Last year, I bought him a brand new F-350. I've got a 16-foot trailer, a skid steer, a track hoe, and now he does all our little site work stuff because we can't get people fast enough. That's how much I believe in people being able to change and giving them an opportunity, and that's the thing that the industry has got to do more of, whether it's people who have had issues with PTSD, somebody coming out of maybe even prison or out of jail. We have to find a way to work them into the system and get them to the level that we need them to be, but we have to find new avenues for employees while still focusing on professionalism. There's a lot of opportunity in transforming the industry. It's a lot of work. I've been around the country having conversations with people, not doing so many presentations like this, but having conversations of how we work together. I deal with the state legislature on the fraud issue. I was able to bring it to the majority leader and our local senator to fight for a change in the statute, because in Florida it said you had to improve intent to defraud at the time of signing a contract. Now, Our state's attorney, when I went to her, she said, Bill, I can't prove intent when they sign the contract unless they say in writing, I'm going to steal your money. But the fact of the matter is, in Florida, many people have done that. Again, affecting the level of professionalism and the stereotype that wasn't on the top four, but it is in Florida and it's visible in Florida. I continue to fight that battle. I continue to fight the unlicensed activity. Those folks also hurt our industry because people think we allow it, and the industry has got to continue to stand up and fight against it. And we need to remind people of the power of construction and how much the modern world is literally built by the industry. Literally built by the world, right? We build that world. Eventually people will go from, it's just construction, to wow, it's construction. And my photos aren't coming up. So I had pictures of some houses, and I had some pictures of some skyscrapers. And then I had that old Rockwell picture of the guy sitting on that steel beam, building a building, Empire State Building, or one of them, right? Those guys did a lot with little, right? I give them all kinds of accolades for what they could do and their ability to do it, but things aren't built like they used to be, and the industry isn't what it used to be. Technology has moved us forward, whether it's in CRM or whether it's in project management software or what have you. It's come a long way. Building the team is important. Certifications are important. Getting your message out is important. And that community involvement picture was one of my proudest pictures, and I don't know why it's not showing. But that was the family moving into the Habitat House. So little Ben became the little buddy of all of us in our organization. And we still go by and see him. He had a great time getting to come to the project, and he was born with a lot of challenges. And when we asked Ben when they were moving in that day, Ben, tell us about this house. He said, this is my house. This is my house. Great little kid, phenomenal family, has a little sister now who he adores dearly, and that's why I do what I do, because giving back is something that's really important, and seeing that family being so happy to have a house is extremely important. But always remember, the professionalism has got to be there, and we've got to fight the stereotypes and fix those that are fact and move forward. So with that, I will stop. My time is up. I thank you for the opportunity to be here. This is my second time I've been to the conference. I love this conference. I learn a lot from everybody that comes, and if you have any questions, I'm happy to answer. Yeah, I'm fine. Yes, sir. About mentorship. Mm-hmm.
That's the wave of the future. It's just finding people that maybe college isn't for them.
Right.
Put them through the apprenticeship program. They come out, they're making great money, and then they also have the potential to get into leadership and management with the company years down the road, and they're doing much better than they ever would have if they would have went to college.
I agree wholeheartedly. In 1987, I went to a fiber crew at AT&T, and I made $10 an hour in 1987 working for AT&T. But there were people that had been there at that company for a period of time that were making $100,000 a year in 1987 splicing fiber cable. You got to look at what's right for you. I didn't want to splice fiber and work on microwave radio towers all my life, although I will tell you, as scary as working on towers was, it was one of the most rewarding things for me because it taught me something about myself. And this is something that we can do in construction. We can teach people that they can overcome certain things, right? Out of college, I have an economics degree. I came out of college, I went to work in an industry, but in the process of going through interviews, I was like a cat on a tin roof. I was all over the place, right? And I went to Roadway Express to go to their management training program. And so the story is they didn't hire me. I went to work for a division of Auburn Industries, and then I had to get out of an office, and I wanted to be out in the field. So I stood on a tower in Naperville, 325 feet in the air, saying, can I do this? Can I go out on that piece of steel and take out that plate and put in a new heavier plate because they've got to put another antenna on this tower? And I looked over and I saw the Chicago skyline, and I turned back around and I saw the planes, and I said, I am not going back to that damn office. And by doing what I did, I went back to work because my wife told me as we were approaching our wedding that I was going to find another job, that I wasn't going to be on the road 8 to 12 weeks at a time. And I'm like, ooh, I hadn't thought about that. So I came back and I said, well, I'm going to go back to Roadway. I'm going to interview with them. And one of the assistant terminal managers who interviewed me the first time interviewed me the second time. And he said to me, Bill, what in the hell happened to you? You're a totally different guy. And I said, I figured if I can work 350 to 400 feet in the air, I'm not going to be afraid of coming in here and having a conversation with you anymore. So it did make a difference for me. It changed me quite a bit. I was always very skittish. I don't know why, it's just kind of how I was made, I guess. Another side note, I'm also a county commissioner, so I'm an elected official, and I'm not so afraid of microphones anymore, evidently, right? Actually, this is more intimidating than talking to constituents, but because we have so many experts in the room. But you can make money in this industry. You can find a niche that's right for you. And I think that with the technology changes that we've seen and the ability to be more professional in how we deliver what we choose to deliver, it's really going to continue to move our industry forward. And I find a lot of pride in taking people who think of construction and contractors as the old pickup truck to what we have today in our office, and what some of my friends now who have seen me go through this modification and the change and the growth and how I'm doing it. I now have regular meetings with a couple of my friends who want to know how to do that design build contract. They want to know how to do that cost plus process. How are you showing your people, what you're doing? I'm a totally open book. And so all my clients see all my costs. They know what I'm making. I don't care. Why? Because I want to bring a level of transparency and professionalism that other people don't want to bring. And I've had a lot of people say, wow, I really appreciate that. And some of them read every single invoice. They get copies of everything I get, every bill I get. Some of them don't even look at it. They just write the check. But at the end of the day, they have the information if they want it. And again, another level of professionalism that others don't deliver or are afraid to try to move to. Any other questions? Or?
Actually, we're at time, and I just want to thank you again. That was a great presentation. Thank you so much.
I'm just going to need the clicker.
All right, thank you again, Bill. Now, moving on. Placing diversity and inclusion efforts at the center of his discussion, the next speaker will present his views on challenges and effective approaches to include underrepresented groups in real estate and construction businesses. Please welcome on stage Alfredo Puyol, owner and director of Newen Holding Group, LLC, who will speak on the subject, Working with Diversity in the Real World.
Thank you very much. Is this on? Can you guys hear me? Okay. Well, the topic now it's going to be like how it's like to work with diversity in the real world. And I'm going to start with, I don't know, a little bit of controversy. Are we equal? And nowadays, media, the internet, or what we call the cool police from Twitter tends to say that we're equal. But the answer is no, we're not equal. How can we say that? Is this group of people equal? No, we're diverse. Is a group of women equal? No, it's diverse. And I like this definition of the Merriam-Webster dictionary because it gives us an opportunity about bringing qualities, different elements, and giving us an instance. And I want to stop a little bit on that word because that word is a little, it may sound insignificant, but it's actually really powerful. It's an instance. And that instance is going to give us and is going to drive us to the opportunity. Something that I see a lot, and I've worked with a lot of groups of peoples, building teams, and in my whole career in the Army, in Taekwondo. Yeah, I was ranked at the top of the world in Taekwondo. I like to say 40 pounds ago, not 10 years ago. I have to say it the right way. And every time someone tells me, hey, come and help me because, I have a problem of diversity. I have a clash between women and men. And I said, dude, it's not just about gender. It's more about that. There is more to it. We need to wake up. We have pretty much or bigger diverse workforce nowadays. We're talking about the LGBTIQ plus community and gender. We also have people coming from different backgrounds. I love when I see over here people from India, people from Chile, people from Poland, people from other countries that are not just women, men. That will be really, really, really simplify the equation and the question and the topic. I also see that we need to take into consideration something that it was gladly spoken before about this generation gap that we have. And one of the things that as someone that it's kind of like a late generation X and early millennial, I literally hate, and I want to use this word, hate, when someone try to blame the millennials for something or try to blame the generation afterwards for something. Because if we put a curse on that, those are the people that are going to take care of us in the future. And we have to incorporate them. But also we have to teach them other qualities. That's why I like that picture, because it's the picture of a guy trying to teach an older person how to use technology. And that's what we have to do. Something that I see about people that works in my company that are younger than I am, it's how they actually teach me how to use stuff. And they're like, no, boss, no, this is how you have to place the order. This is how we're going to deliver this. And that actually has aggregated more value to the company than all other stuff. Another topic that I want to mention about diversity, and this is a really personal approach about this. This is a really personal approach about this, is that we have to start seeing this more like a commitment rather than just for the sake of profit. Unfortunately, when I walk into one of these theme months, I start, seeing more and more and more and more and more. The Hispanic Heritage Month, for instance, it's being advertised. And I'm like, okay, why they do it in October? You know why? Or you know what it's one of the decisions? Because of the discovery of America. And someone like me with a background of indigenous culture, part of my family actually, they don't like that. They don't like. We were never discovered. We were here and we were looted and all that kind of stuff. So, I don't know. I don't see this as something that it needs to be just profit driven. It needs to be a commitment of the organization. We have people of an underrepresented community, so what can we learn from them? What can someone from Chile, which is one of the minority inside the minority of another minority here in America? I mean, every time people say Latino, it almost means Mexican, or in another of the coast, it can mean Cuban, and I always feel like, what about me? I'm not part of that. An experience that I had, I came to America exactly 10 years ago. I came to do my MBA at the University of Denver. And it was funny because I was the only Hispanic on my cohort. And my group, my cohort, in order to cheer me up because I was the only Hispanic, they went and they invited me for lunch. You know where they took me to? A Mexican restaurant, exactly. So they were like, yeah, so you can feel at home. And I'm like, no, guys, you know, I'm from Chile. We have different stuff. I don't know if you noticed that. I mean, but not so close. I mean, there is a whole continent in between. And I'm actually kind of like from the south of Chile, so even more deep south. And thank you for your idea, but you're doing it wrong. And why we do it wrong? Because unfortunately, we don't do it organically. Okay, I mean, I tried to put or Google pictures of organic growth of a company, and this is the best that I could get. I mean, unfortunately, nobody has come with a better concept than that. But I would say be organic, because something that I see, and this is why I come back to my point, whether this has to be profit-driven versus a commitment. I would say that if it's a commitment, eventually the profit are going to come. And that's something that I see on every of the presentations. I mean, like Candy was saying, hey, you know, nobody told her like, hey, you know, we're going to put the image on a truck and we're going to go around the city and that is going to make you money. No, it came out of the commitment, or maybe trial and error. I don't know if that was true. I mean, probably maybe it didn't work, but it worked right. So at some point. So one of the things that I say is like how to be organic. I see the best example in the movies. Steven Spielberg, for instance, a guy that he said that he was on the first week when the Disneyland park opened. He was inspired. He got there. He saw his dream come true in front of his eyes. And the other thing that happened to him is like, hey, you know, all my nerds, and this is said by him. I'm not calling him a nerd. He was like, hey, all these ideas that Walt Disney envisioned, could he bring them to life? And when he started becoming a director, he wanted to do the same. He likes science fiction. He likes Flash Gordon, comics, and everything. He creates Star Wars. Sorry, George Lucas. I always get them confused. Steven Spielberg, when he creates the Schindler's List, it was part of his family, part of his origin, where people that actually fought in war and had issues as a Jewish community. Francis Ford Coppola, as an Italian, he knew how that Italian community was, and he knew all those mafia leaders, and that kind of like drive him to create this movie like The Godfather. I'm not saying that they cannot do any other movies, but something that is going to be easier for them, how to grow into the business and how to grow this knowledge into other areas. It's actually talking about something that you're honestly honestly know about. I mean, as a Chilean person, as a Hispanic, it will be really not natural to talk about or start doing something that is driven by another underrepresented community that I don't know nothing about and that I'm not connected about. So, an example of what happened in our company. We have receive a lot of people, and a lot of times they tell me like, hey, you know, how do you advertise to different underrepresented communities? I don't. They just come. It just happened that they come. Someone invites them and they come. The biggest thing that we do is that we don't see that as kind of like a tool to actually leap over them and start advertising because of your employees. I mean, I've never done that. And if we have to, I will have to actually ask them. One of the things that it happened to me is that because I was the only Hispanic guy, I was always in all the pictures of the MBA at my university. And it was basically to say, look, we have an Hispanic, look, we have a Latino, look, we have a Latino, look, we have a Latino, look, we have a Latino. And I was like, stop, stop, stop. Guys, stop, really. I'm not a talking dog. I'm not a subject that to kind of like being showed at the zoo. I'm a human being, and actually I don't like all the attention. So basically, my point is be respectful when you try to do this kind of things, because unfortunately, some companies kind of like start becoming passive aggressive about it, and they really kind of like try to push you, and I felt like that in the past here in America also. And I see that they're, I don't know, it's kind of like you start seeing them as not honest. An example, I live in Denver, I live in Northfield, and almost 4 blocks from where I live, there is a Target. And the Target, I remember one month, I mean, it was September. I went there to do my groceries after a day in which I was teaching the guys of the company and the girls of the company how to throw some texture. And if anyone has gotten into that, they know that it's pretty dirty. You get dirty, but dirty, dirty, dirty. And I went after that to do the groceries. I put my cart on the line. 2 security guards. Sir, you have stolen from this supermarket. No. Do you mind if we check your cart? No. And then they realize, hey, you know, guys, Mr. Puyol, sorry about that. And I was like, guys, I mean, I come here every day. And how come, I mean, just because I'm dressing differently, I mean, you're treating me different. And then they say, no, we made a mistake, it's an honest mistake and everything. I remember putting a complaint that it was unanswered, and then the next month, because it was October, I see, welcome all the Hispanics, welcome all of this. So how do you think it went with me? I mean, I was like, well, this is not honest. But again, something that I've learned from the millennials is that need from compassion, but actually to execute that. I still go to the same supermarket because after a little bit, some of that people came to me and they said, hey, we made a mistake, and we need to learn how to forgive people. Example, everyone watched the Oscars. Everyone knows what happened. I mean, I don't need to repeat it, and don't worry if there is anyone with alopecia over here. I'm not going to make a joke. I don't want someone to get on stage and slap me. But my point is, okay, someone makes a mistake nowadays. Some of my the guys that work with me, that are millennials, they're like, we need to punish. He needs to lose his job. He needs to get canceled and out of the life. And I was like, wait a minute. What happened when you completely fuck it up at this job site? What did I do? You said that it was okay. Okay. What else? You said that I need to learn from this. Okay. Did you apologize? Yes, I did. Okay. Move on. And that's something that we have to do in current society. We have to learn how to forgive, and maybe not forget. I mean, now I'm a little more careful, but it's kind of like funny. I mean, I have a friend that he's sick as his religion, so he wears I don't know how to say it in English, but he always wears a T-shirt when he goes to the airport, instead like selectively chosen by security, because everyone, I don't know, thinks that he's a terrorist just because of the way he dresses. But I don't know, he takes it with humor, and he sees this as an opportunity to educate people. And he always gets to the officers, and he always said, hey, nice to meet you. My name is Rai Singh. I'm a Sikh. You might confuse me for someone else. And he always said, hey, this is our religion. This is why I wear this for. And eventually he gets people educated. But actually, he was the one that taught me, hey, you need to learn how to forgive more. Not forget, because, I mean, if he would forget about that, he will be a little less careless on every trip that he makes to the airport. And believe me, once they see me like speaking in Spanish, I get more carefully searched than other ones. And one of the things that I've noticed, it's like that is crucial. It's actually work with your teams, guys. And when we talk about diversity, I mean, this is not again like, oh, so you're black, I'm gonna go and talk with you. No, because that is not going to be honest. Oh, you're Hispanic, I'm gonna talk with you. Oh, you're gay, I'm gonna go and talk to you. No, get to know your team and get to know them, and take some insights. Because eventually, if those people are happy at your company, they're going to call other people. And guess who they're going to call? People like them. Like it happened to me. I had one guy from Mexico. He said, hey, my dad knows how to work in construction. Okay. Can I bring him? Okay, bring him in. And now we have his dad and his two brothers, and probably his sister that is going to come from Mexico is going to join us. I mean, and again, we don't make it a big deal. We don't make it a big deal about it, because we actually believe that everyone can bring something to it. Like the first time that we had someone from the LGBTIQ community, she came to me and on the meeting she says, hey Alfredo, I need to warn you about something. What? I'm a lesbian. And I was like, why do you have to warn me about that? I mean, can you work 9 to 5? Can you lift more than 45 pounds? Okay, you're starting on Monday. Get the fuck out of here. That's what I just said. And I didn't make it a big deal. And obviously, because she was super, super shy, I wasn't kind of like advertising, hey, we have a lesbian, hey, we have a lesbian. No, because that would be actually super patronizing on my side, and that will be actually super bad for her. I mean, believe me, she was super shy, super, super shy. And another thing, work with people and give opportunities and learn how to forgive. When the previous presenter talked about like working with people who has committed felonies, 1 of every 4 Americans have committed felonies here in America or have been in jail. Has anyone talked with a PO officer? Well, you were in the force. So some of the PO officers that I've talked, they're great. Some of them, they don't care. And you have to be there kind of like in the middle and try to give them the opportunity to actually get back on track. And it's super, it's super rewarding when I actually, we were hiring people, and we worked with some POs officers, and one of them comes and said, hey, I want to thank you that you gave me the opportunity to work here. I mean, he was super grateful, and he told me, hey, but why you guys treat us different? I'm a felon. I mean, I used to steal cars. I used to rob houses. Why do you treat us different? And I was like, hey, dude, Blair, if I treat you as a criminal, you're going to behave like a criminal. If I treat you with care, with love, and trying to understand where you're coming from, I expect the same thing. And if you don't give me that after treating you with care, with love, and understanding, you have no choice. I'm going to be the first one to kick you out and to send you back where you came from. So this is your opportunity, so go and take it. And, well, thank you very much. That's a picture of my cat who is waiting for me and my wife at our house in Denver. That's probably is excited for this trip to end. And that's it. When we're here yesterday, when I accepted my award, I actually thanked my boss, the best boss that I have ever had, Alejandro Lagos. And I think that if he wouldn't be that way, probably I wouldn't be like that. Because actually I saw him like a positive role model. And actually, I think that I was smart enough to actually not follow the bad bosses. Actually, I took them as a bad example. I took them as an example, but as a bad example. Like the guy that screams at you, the guy that put an enormous amount of pressure on you. I didn't want it to be like that. And I would say the involvement, if you see that your boss is involved in the community, he's giving opportunity, you see that he cares about it, you see that he praise you in public. And I know when Alejandro was like, Alfredo, can you come to my office? I remember that I used to go like, okay, here it comes. Here it comes, here it comes, here it comes. And I was like, no one else? No one else. Oh, here it comes, here it comes, here it comes. And actually, coming from another company before that, I thought, oh, he's going to scream at me. But he wasn't like that. He actually said, you did a really big stupidity. Actually, you mess it up big time. Okay, this is how you fix it. Don't do it again. And before messing it up, ask, communicate. And I think it's that. I mean, people, again, moves more than being moved by your words. They're moved more about your action and your example.
Great, thank you so much.
Okay, thank you so much, Alfredo. Now it's time to break for lunch, so don't forget to use our hashtag. It's Realty2Conf, and we'll meet back here in 60 minutes. See you then.
Hello. Hey, 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 hey. Hello, hey, hey. Hey, what's up? 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 Hey, 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 hey. Hello, hey, 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 hey. 1 2 1 2 1 2 1 2. Check 1 2 1 2 1 2 1 2 1 2 1 2 1 2. Check 1 2 1 2 1 2. Check 1 2 1 2 1 2. Check 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 check. Check 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 chickadee check. Check check check. Hello, hey, hey, hey.
All right, hello everyone. I hope you enjoyed your lunch. It's nice to have you back. So this session coming up will help explain an important question, how PPP can help deliver better industrial parks. Case of Morocco. I'm sure everyone wants answers to this. So please join me in welcoming the speaker, Hicham Asim, Senior Director of Demonstration Industrial Zones at Millennium Challenge Account, Morocco.
So, hello everyone. My name is Asim Hisham. I've been working in the development of industrial zones for almost 20 years. I'm here representing Millennium Challenge Account Morocco, which is the Moroccan partner of Millennium Challenge Corporation, MCC. So MCC is a United States government agency which is granting funding to select countries, lower income countries around the world with the goal of alleviating poverty through economic growth. Today, I'm presenting 3 Moroccan industrial zones being developed as a public-private partnership where MCC has provided the financing to support the preparation of the project and the transaction advisory, as well as a large-scale core infrastructure, notably off-site infrastructure. All this to make the deals viable and bankable to the private sector. On the other hand, the public partner has provided the land at a steep discount and has granted all authorizations and necessary permits, like, for example, all urbanistic and environmental and social permits. The private partner, on the other hand, is financing the on-site infrastructure and is developing, managing, and operating the zones over 15 years, during which it has to meet certain key performance indicators. Before going into details, I would like to invite you to watch a short movie about these projects. So please go ahead. Sound.
Morocco has several assets making it an attractive destination for investment, especially in the industrial sector. A stable macroeconomic environment, access to a market of over 1 billion consumers, infrastructure built to international standards, a qualified and dynamic workforce, a strong business environment, and ambitious growth strategies, including the Industrial Acceleration Plan. Morocco is
Thank you. So that being said, so the question is why these three projects? So let's say that these three projects are a shift from public-driven industrial zones to market-driven industrial zones in Morocco. So over 50 years, Morocco has developed more than 100 industrial zones, totalizing more than 6,000 hectares. The fact is that these publicly funded or publicly financed industrial zones are in most cases not well thought through. They are not well located. They lack amenities needed by industries. They suffer from poor property management, and they are bought by speculators and usually sit half empty. When we say sit half empty, it's like 3,000 hectares which are empty. This means that all the public investment in these industrial zones went to loss. That's why we have these industrial zones as a demonstration site. The idea behind this project is to demonstrate to the public authorities in Morocco that it is possible to develop in the same conditions, under the same law and regulation, world-class industrial zones that are well managed, well governed, that they respect the environmental and social standards and respond to the market demand and investors' needs. These three industrial zones, as you've just seen, they are developed using MCC finance, and they are located in the Casablanca region, which is the heartbeating of Moroccan economy. They are bringing more than 136 hectares of a highly sought after industrial land to the market. The public investment in these industrial zones is almost $68 million. However, these projects are catalyzing more than $500 million, and they are creating approximately 27,000 jobs. How did we get there? So first, we pushed the public authorities to change their mindset and start to think and act like the private sector. This meant that we first started with a market analysis to identify the ideal location for these sites. This included analysis of regional economy, accessibility, and availability of the workforce. Second, we've conducted continuous consultation with the private sector and the future clients, including end users, during each phase of the design and the construction of these industrial zones in order to right-size this product with the industrial needs and the needs of the market. And for example, in some instances, industrial land plots have already been sold or are oversubscribed, even as the private partner has yet to begin the construction works. Third, we have adopted a PPP model to leverage the private expertise and the private financing. This approach also helped bring new players in the market. And in the industrial real estate sector in Morocco, in this model, the government has also optimized its public spending in industrial zones. For example, for these projects, they are leveraging 7 times, I would say, the public investment. For each dollar invested by the public sector, we have $7 invested by the private sector. And finally, we made sure that these deals are ultimately profitable for the private partner. As noted earlier, this included feasibility studies to ensure commercial viability of the industrial zones, transaction advisory to tender market and award these PPP, construction of core infrastructure, providing the land at deeply subsidized price and facilitating all permits and authorizations. So these 3 projects are just a tip of the iceberg for investment in opportunities in Morocco. I invite you to explore the investment possibilities in and around these 3 industrial parks, and more broadly in Morocco, which is a fast-growing hub for commerce between Europe and Africa. So that's it for my presentation. Should you have any question, I would be happy to answer.
Quick question. I was in shipping for about a year, and if I have my geography correct, right, the port is on the. If I have my geography correct, the port is on the Atlantic, right? So, is there an easy way to access the Mediterranean instead of going through the Straits of Gibraltar? Do I have my geography correct?
Yeah. So we have several ports in Morocco. So the biggest port is Tanger Med, which is the newest port already built in the Mediterranean. And so in face of Gibraltar. So there is easy access to the highways to Tangier and then and next to these industrial parks, so we have the former biggest port in Morocco. But knowing that this region, in this region, so we have like 70% of all export and import from Morocco. It's like the 70% of the industrial economy which is concentrated in this region.
Nice. But I guess, do you see most of the exports crossing the Atlantic or going into Europe, or how would you guys envision? I mean, I think it's like very well situated, obviously, but do you have any data on that, or what has been done, or where those exports typically go?
So the main exports go to Europe. The exports are mainly auto parts, which are designated to the construction of vehicles in the Europe. So in Casablanca, it's like 3 days drive to the most, I would say, far point of Europe, and agro-industry too, agriculture. So all these stuff are exported to Europe. This is the main destination of.
That's the main. Okay.
Yeah.
Cool. Thanks.
Anyone else? Other questions?
Good?
That's it, yeah.
Okay, great. Thank you so much.
Welcome.
Thank you.
Okay, thank you, Hitchin. Now let's proceed to the next session, which is actually a panel discussion. This session is entitled The Rise of Off-Site, Modern Methods of Real Estate and Construction. The popularity of pre-designed and prefabricated homes is growing, moving much of the construction process from the building site into factories. So what does this shift mean for real estate and construction professionals? To answer this question, we have with us Dee Wilmore, who is Head of Agent Development at Radius Agent. Please welcome him with a round of applause.
Thank you so much. How are you? Yeah, nice to meet you. Too. Good afternoon, everybody. Thanks for attending. I know this is a rough one. We're coming out of lunch, and so everybody's just like, oh my God, what are we going to talk about, right? But thanks for all of you who are actually here. I'd like to invite up Bill Weaver. Bill is in the prefab space. So first of all, let me introduce myself. So my name is Dee Wilmore. I'm a real estate broker, 27 years in the business. I'm with a company called Radius Agent, which is really about agent forward, agent first. It's all about coaching, developing, growing an agent and their brand. Can you hear me okay? Thanks. All about growing their brand. So that's a little bit about me. I've been coaching real estate professionals for about 20 years. I teach real estate, have witnessed lots of changes in the real estate industry, as have all of you. What we're talking about today and some of the changes that are endemic to our business, both in construction and in real estate, is the prefab movement. That's been a several-year trend, but it's taken on more and more steam. We're looking at different products of prefab. Certainly, most of you are in markets or have experienced markets that are saturated with real estate professionals and buyers and no inventory. So when we start to talk about the prefab space, what does that mean? What we're going to discuss today, and Bill, welcome. Oh, you got a mic, there we go. Tell us a little bit about you. This is Bill Weaver. Bill, tell us a little bit about you.
Are you going to have Simon come up also?
Am I going to what?
Have Simon come up also? Or do you wanna
Where is
wait?
Simon? Simon, oh, so, I'm so sorry. Did not see you. And we also have Simon Polito. Simon, my bad. Hit me when you get up here. I'm so sorry. It's the lights. I couldn't see. I was blinded.
It's all good. It's all good.
Good to see you. How's everything? Good. Good. Please. I'm going to go ahead and join you guys in a seat.
Okay.
So, Bill, tell us a little bit about you. What's your business model? How'd you come to be here today?
Well, I came here, fortunately, I was invited to this. They ran through my LinkedIn page, and I am actually in the design, build, multi-trade construction business. I work for a soon-to-be billion-dollar company in the St. Pete area of Florida, and we actually do work in 27 states. We do a lot of high-rise residential, garden-style residential. It's mostly residential. We do a few other types of construction also, but mostly residential. And I've been in the industry 36 years. I just love what I do.
Short-termer, huh?
Yeah, short-termer. Yes, absolutely. And I just, we've got a great bunch of executives that work for us, and we were talking earlier about women in construction, and half of the people that are on the executive board and half of the project managers probably now for our firm, which is 1,200 people, are women.
Yeah.
So it's a great opportunity for us to branch out and become diversified, no doubt.
That's awesome. Yeah. Simon, how are you?
I'm great.
Happy Friday, my friend.
Happy Friday.
Tell us, yeah, exactly.
We made it, guys. We lasted a week in Vegas.
No doubt. Tell us a little bit about you.
Okay, so born and bred Sydney, Australia, to both immigrant parents. My dad was born in Italy, my mum was born in Lebanon. Yeah, so it was pretty cool growing up with all the different cultures. I thought it was normal. Apparently, it wasn't that normal. We had a farm. We were farmers, so we grew up on a farm right in the middle of the city.
Yeah, right.
School excursions were to my grandfather's house to play with the goats.
There you go.
So, again, I thought that was normal growing up, but it wasn't.
Yeah.
My dad was a civil engineer, and I grew up my whole life on building sites. I love building. That's actually one of the reasons that really attracted me to this.
Okay.
With the combination of real estate and the construction industry. It's like me. That's me.
Right.
that's me.
Right.
Right. Because you can't sell something that's not built.
Right.
Well, you can, but it's not the same effect. So my dad, being a civil engineer, I used to go with him on job sites every school holiday break, weekends. I always wanted to be with my dad at work.
Yeah.
I loved it, but I wasn't a scholar. I didn't finish school. I did not finish high school, and I didn't know what to do with my life. I didn't want to be working in a grocery store, and I didn't want to be a mechanic. I wanted to get, I like to dress nicely.
Right.
You might have noticed.
Right.
I like to dress
Keep
nicely. I
yourself
like to,
from under your nails,
yeah,
right?
right. My dad used to keep your hands clean and your back straight. So I'll be a carpenter, Dad. He said, no. So I will be an architect. Because you want to be an architect? You didn't even finish school. No one, you can't even get into college. So I thought, what's an industry that would give me the best of all worlds? And that was real estate.
Yeah.
You get dressed nicely. You're in and out. You meet people. I did a chef's degree because I like to cook food, because I like to eat good food. And I was like, real estate's like hospitality. So I did that in Sydney, Australia for 14 years. And when I met my wife over in San Diego, I convinced her to move to Sydney. She lived with us over there for 5 years. When she was pregnant with our first child, we decided we wanted to move to the United States to give our children a better future and I've said this in multiple rooms over the course of the last 3 days, this country is so much the land of opportunity still to this day.
Very true. 100% agree with you.
It's just if you don't look for the opportunities, you'll never find them.
That's right.
So I came out, literally packed up my whole family, went on a boat, not a boat, a plane, and we moved across the world. I didn't know anybody.
Right.
You know, here we are
How
standing.
long you been here now?
Almost 7 years.
Okay, yeah. Big leap of faith.
3 weeks ago, I was in Cabo speaking to 2,000 people. I'm traveling to Australia next month to speak to another 1,000 people. The opportunities that are coming from everyone I'm meeting at conferences like this, whether they're a large room or a small room, it doesn't matter. It's the people inside of it.
That's right.
And the stories they've got to tell.
That's right.
And being relatable. And just having fun. There's no ego here.
Yeah.
Right?
That's always it.
Don't be ego.
I like you, Simon. I'm a college dropout, and I'm in the engineering world. You work your way from the bottom up.
Yeah.
You learn what you need to know. You become a people person. You communicate well. A lot of problems with the engineers that we have today is their communication skills. Actually, their lack of communication skills.
What communication? There's just no communication.
So that's the biggest.
It's funny, I saw that growing up, and you're definitely right. The way the trend is going with the construction industry with females, my whole life growing up with my dad, I never saw a female on the site.
Yeah.
Now,
Well, I mean,
I'm
that
dealing
all-
with females every day.
That all speaks to change.
And I love that.
When we talk about where real estate and construction is, and certainly there's been lots of change, both from personnel to building styles and types, and now where we sit, which is we talk a lot about like ADUs, we talk a lot about prefabs. We see a lot of prefabs, certainly in larger cities. With the housing crisis, some of you may be familiar with tiny homes, things like that. But, let's talk a little bit about prefab. So, Bill, you and I were talking a little bit about not just the structure itself, but some of the systems that go in and the convenience. And if you think about a prefab versus traditional construction, what's the chasm, and why would you choose a prefab over traditional construction?
Actually, and is the quality the same?
And the quality, absolutely, good question.
Believe it or not, the quality is actually better. We have found with Power Design, the company that I work for, that we pre-manufacture all of the unit panels, the electrical panels. All of these electrical panels are built. We have a 100,000 square foot manufacturing facility where we do lighting. We use it as a distribution center for lighting and also as a prefab for all of our panels. So every unit panel, not every one now, but soon to be every one, they've already got the lengths of the feeders to all the devices cut out, pre-cut. All the branch circuits are pre-cut. They come in, they install this panel board in the unit. It's plug and play.
There you
What's
go.
the average time for, let's say, 1,000 square foot prefab to go up?
From the electrical standpoint?
Let's talk about total, including electrical, including plumbing. Obviously, they're all built off-site. Have you had an opportunity working with prefabs?
I haven't personally, but I've seen one happen. I've seen from afar.
Yeah.
I just haven't had the pleasure of being involved in that. But I just finished. I just personally built a massive home, which I just sold, which was
What were your pain points building that massive?
Took 7 years.
Yeah.
We went $5 million over budget.
Oh, yeah, that's painful.
We had Coastal Commission and the city to deal with.
Yeah.
I built a 7-story mansion into rock on Mount Soledad in La Jolla, San Diego.
I was going to say you must down San Diego.
And we spent $9.5 million, and I just sold it for 7.25.
Yeah.
But I mean, amazing home. But we custom everything. Everything was custom. Everything had to be custom. There was $400,000 worth of glass in the house.
Right.
So I took off away from your question.
I mean, it kind of ties in because if you look at the cost of a custom built home, and staggering, right?
And even now, that would be more now.
Right.
That was before COVID.
Right.
That we did that.
Yeah.
Now it would have cost $15 million because
Yeah.
of labor, lumber, and everything else included.
Right. And with the supply chain, all of that going on, so a prefab, again, lighting systems already built and plumbing's already integrated. A lot of prefabs use standard surfaces or common surfaces to where it makes it easy, and they can go up in a day.
Well, from our standpoint, we do the electrical distribution system prefab. We're not to the point where we do the plumbing prefab or the mechanical HVAC systems prefab. The walls are all built. It still takes some time to do the unit, but we found from our standpoint as a design build contractor that pre-doing the electrical and shipping it to the job site, we save 20 to 25% in labor.
Yeah.
By
Wow.
by not having to do it on the site and wire everything at the site. We do it all. Ship it to
Really?
the job site. Yeah.
That's fascinating.
Plug and play.
Yeah. So, because we're having a panel discussion, right? I mean, there's a lot we could kind of talk back. What are some questions you guys have? Who out here has had experience in the prefab world? Go ahead.
Sorry.
It's on.
Yeah,
It's not working.
there are certain sites have the site condition that cannot bring in like a heavy equipment to install the prefabricated houses or containers. I'm not exactly sure how your houses get delivered on site. So how you going to solve that problem if you cannot have a crane on site to install it?
From our standpoint, the prefabrication we do is of the electrical. We do a lot of high-rise construction. We do garden style where it's 6 stories or less. We do mid-rises also, but a lot of high-rises. And what we do is we go in and just take the electrical distribution system within the units. Typically there's between 200 and 500 units in a building. So each one of those electrical panels, we take the plans, we scale them off, we cut all the wires to the right lengths. We pre-manufacture that. We pre-manufacture the panel boards with all the breakers in it. We ship it to the job site, and boom. It's so much easier for us and so much less labor and less mistakes.
Yeah.
Everything's already pre-cut. So, and we're getting to the point where we're starting to do that mechanical also.
You have a question in the back.
Question. Go ahead.
What's all this we hear about 3D printers?
3D printing houses.
Thank you. What's all this we hear about 3D printers making houses? Do you hear?
Well, 3D printers can pretty much make anything these days, including engines, right? As Simon was talking about, he built a custom home, ground up, right? Sticks and lumber, all that. The cost to build, and particularly now, where we're really stuck, where the industry's really bottlenecked is the material. Materials super expensive at this point in time right now. We're always looking at cost of unit, right? That cost per square foot to put up something. 3D is instantaneous, just like when he was talking about the lighting, when Bill was talking about the lighting. That's something that can be done internally, shipped out to the job site. You've got less labor, you've got less cost of material, and a quicker turnaround time for the build.
Yeah, with the lighting, it's basically plug and play. I mean, you get pre-manufactured whips. You install the light fixture, you take these whips and you plug them in from light to light rather than having to do wire and conduit. We really don't do anything in the 3D printer realm because of the number of units that we do and the size of the jobs that we do. But I don't know, is that something for residential construction?
So I'm in the Bay Area. There are lots of innovative inventions that happen. People are experimenting, trying out a lot of different things. There is a 3D built home on the peninsula. I don't know how habitable it is, so I won't go as far as to say that. But honestly, 3D, you can build anything. You can build anything. So time will tell as to its cost effectiveness, if it's a viable product for the future, but certainly there are companies that build ADUs, accessible dwelling units, because there is so little inventory for most markets. And because there's so little inventory, those ADUs actually give that additional footprint or that additional property that's available to someone. So 3D may be the way to go. That might be something in the very near term that we start to see more and more of. Other questions?
So Simon, when are they going to perfect smell-o-vision?
Perfect a what?
Smell-o-vision.
Smell-o-vision.
I don't know how to answer that question.
Hopefully no time soon.
No, yeah, I'm not in a rush for it right now. There's a lot of shit on television.
No shit, right? That's, yeah.
Sorry for swearing, not really. I'm Australian. It's part of my vocabulary.
Hey, we are too. We speak fluently. Question?
Actually, curious on the 3D printer. I've never seen a physical home built with a 3D printer. Maybe you have. I'm actually curious. Like, what's the material they're using?
So it's kind of a polymer. There's an ADU builder in San Mateo, California, that they use this type of polymer substance for everything. So if you've ever seen a 3D object, it's this type of polymer that gets kind of melted and shaped from an AutoCAD into whatever you want. And they have massive 3D printers, and they've got tiny little home 3D printers, and literally you can build anything with a 3D printer. So all of the components, all of the working mechanicals can be built in a 3D surface, minus obviously something like electrical or things like that. But yeah, I mean, just the
Good
whole
question, though.
thing.
Yeah, I'm actually curious to see where that goes, because I just said before, I just whispered over to you. Yeah, I saw it at the start, and then it just sort of faded in the background. It sort of hasn't been a topic of discussion for a while, from my experience.
Right. No, I mean, it's when you talk about anything that's pre-built, it's a convenience factor that I think is really what people are looking at on so many levels. I mean, just the cost per square. Go ahead. Sorry. Yeah. See, I was wondering what you were doing. I was going to go. That's a rude.
I'm not trying to be rude. yeah. So the mics here, especially because we're live streaming as well.
Gotcha.
So we've been hearing you have to say, because what you're saying is important.
Yep. Question?
My question was, we touched on it a little bit during lunch, but perhaps you can expand upon it. We've investigated SIPs and panelized systems and different things within our area, but the challenge is getting the local municipalities to adopt the prefabricated modular system within the codes, because they have specialized codes. How do you address the overwhelming variety of codes that are across the country?
Well, from our standpoint, where we do work in 27 states. Every one of those states has had no problem with us coming in, building the panels in our warehouse, manufacturing those panels, bringing them out to the job site, and just wiring them back to devices, and the devices wire back to the panels, and pretty much plug and play. It saves us a lot of labor. It also saves us mistakes. It's pretty much, I'd like to say it's foolproof, but it takes a lot of time to be able to build all those plans and detail those plans to the exact linear footage of your branch circuits, which go from a receptacle in a wall or a light in the ceiling back to the panel at its location. So you've got to be very precise when you do the detailed drawings of how this is going to be built and pre-manufactured. The days of AutoCAD are pretty much gone. I'm old school, I'm like Ed. We were laughing last night about drawing with a T-square and a straight edge on a table with rectangles. I mean, those days are gone. We went to AutoCAD. Now we've gone from AutoCAD to Revit, and everything's built in 3D in Revit and in BIM, which is Building Information Management. It's a tool where you can overlay all the systems on top of each other to resolve any conflicts before you go out in the field and build it. There's a lot of time that's spent overlaying these by the contractors at the job site, by us as the engineers in the office before we issue the plans. So it really makes everything a lot easier, and it makes it a little more foolproof, but it also requires time, and it requires a lot of manpower to be able to assemble these things so that you don't have any clashes. I mean, in the old days, we used to get a light table, and we'd put one mechanical drawing over an electrical drawing and over another drawing, and you'd be able to see through all these and see where you had the conflicts. You don't have to do that anymore. It's all done by, computers, which makes it much, much more effective. And as far as updating backgrounds and that kind of stuff, it's so much easier. Boom, they give us a revised background, we plug it in, and you're good to go.
You'd also have less user error as well, I would imagine.
Yeah, well, yes and no.
Depending on how you're inputting information into the computer.
People have a tendency to take shortcuts sometimes, and those shortcuts can really cause some pain down the road. So you've got to make sure you do things exactly the same. And it's hard when you have 1,200 people in the company and 120 people in the engineering department, and you're getting everybody to do the same thing on all the jobs. Quality control is. Everybody likes to do things a little differently. They've got their own little way to do it. So.
Yeah, but I think to Simon's point, I mean, that's a great point, Simon, is literally we're taking that user prefab gives a uniqueness to it where it's not necessarily cookie cutter, because it can be bespoke, but it definitely takes that user error off the table, because you can see it. You know, someone was talking about 3D modeling. You can see it, any mistakes far before it actually hits production.
Yeah, avoid massive cost.
Right.
Just flip the power on your mic went off. It's
Flip the switch.
Test.
There you go, yeah.
That's you?
Yeah, can you hear
Yeah,
it?
can you hear me? Yeah, you got it. Nope.
Dead battery. It's got a dead battery.
You
Oh.
gave me a dead battery.
I'll switch you. It was all a test.
Thanks. I'm in the matrix right now. Okay. Other questions? I know this is kind of an obscure topic, and literally Bill is the expert out of the three of us up here on this panel, but you know, there are some folks. Go ahead, question. There we go.
So I talked to a prefab builder. I guess that's the term. I get all confused with, and I think people in general kind of get confused between prefab, modular, right? And they kind of mean different things, but the same thing.
Yep.
And I was told stick built will be cheaper. This was a place up in New Hampshire, and their pitch, you know, they're like it's better quality. But say, you know, a scenario where someone builds 10 or 40 houses and they build prefabs. Do you think you could charge a premium to the buyer, and how would you pitch that? And if you can help me out with the better terms to use too.
Let me speak on this, because I just, believe it or not, bought a pre-manufactured home. And it's so funny, because you go to the facility where they manufacture these homes, and it's basically a double wide trailer. You go there, you pick out your finishes.
Yep.
They take it there, they build it, they ship it in 2 halves. It gets to the job site, and it's got 80%, 90% of everything that it needs to have to make it a fully functional house, and then they go in and paint and flooring and that kind of stuff later on down the road. But it's a lot less expensive than standard construction. Maybe, I don't know.
Cost of the land in addition to,
Yeah, well, from my standpoint, I rent the land, so I don't have to.
Yeah.
I don't have to, worry about buying the land. But for me, it was much more affordable. Much more affordable. I sold the house, and everybody's like, "Well, okay, you made a lot of money on your house. Where are you going to go?" Well, fortunately, I had the luxury of going into a 55-plus community and living in a pre-manufactured house. Most people don't have that luxury. So.
I will say, so when you talk about stick-built and the difference between, say, a prefab, because lots of prefabs use different materials, but if you're talking about a pre-manufactured, which in essence is a stick-built, it's just something that's built off-site, not actually on the job site itself, you can build some beautiful custom houses that are pre-manufactured, built in a factory and shipped to the job site itself. Certainly in the Bay Area of California, you see some very gorgeous manufactured homes, large, 4,000 square feet and above, that were manufactured, built in a factory. So, things you're saving on are labor. Some of the intangibles that we don't think about are crime. Vandalism on a job site, things like that. Destruction of materials on a job site, things like that. And so there are some clear advantages, particularly like if space is small and you can't get the type of heavy machinery you may need to facilitate a build. There are definite advantages. These days, and again, just based on supply chain, so to your question, I think that would depend on that timeline of when they said stick-built is more relevant than, say, something off-site, because the cost of lumber is astronomical at this point in time.
The other advantage to pre-manufactured is you don't have a house that you're putting up where you get rainstorms and everything gets all the elements before you have a roof on the building. Can get a lot of water in them. So these are pre-manufactured in a warehouse, and they stay there until they're done. And then they take it out in 2 trailers, one half the house on one half the house on the other. They put it together, and you don't have to worry about the elements and water and storms and all that stuff.
And time. Time.
Time,
Absolutely.
absolutely.
Because every time, oh, I can't work this week, it's a rain day.
Yeah, yeah.
You heard that before on a construction site?
Yeah, brilliant, yeah.
We're still dealing with supply chain issues with some of the appliances, but be as it may, not much you can do about that.
Yeah, with about everything.
So those are those wide load trucks that always make me late for work?
Yeah, right.
Got it.
Me again. I live in South Florida. I remember Hurricane Andrew.
Yes.
And now, I've been seeing all these warehouses go up with tilt wall.
Yes.
Are those safe? I mean, when the next Andrew hits and all that, are we going to be okay?
Very safe. Any of that tilt-up construction, it's solid concrete. I worked in South Florida for 31 years, so I'm very familiar with a lot of that tilt-up construction. We did high-rises also, but I also, in my years before doing high-rises, we did a lot of tilt-up construction. I lived in Coral Springs. There's a big warehouse. Where do you live in South Florida? Miami Beach. Okay. Well, if you ever go out on the Sawgrass Expressway, past City Furniture.
Yeah, there's a whole community there of all these warehouses, yes.
And that City Furniture is 750,000 square feet of tilt-up construction, and that building is rock solid. And also, believe it or not, the manufactured houses go through the same wind test.
Yeah.
That normal construction does. They still do the missile impact test, still goes through the same test that a standard construction house would go through. The only thing is, it's anchored to the ground, but it's not, it's not as solid, and it's not poured on footers like a normal house would be.
Yeah.
Are they testing it off-site or when it's on the actual plot itself?
Yeah, they do it both.
Both. Cool.
They do it in the factory, and then they do it on the site also.
So basically, he should go to the factory the next hurricane. That's probably the safest place for it.
Absolutely.
So what about those hurricane-proof windows? I mean, if a coconut hits it at 200 miles an hour, are we okay?
Who was the window man? Weren't you the window manufacturer? Can you
here we go.
test that?
Go for it, Ed.
All right, hold on. Coconut, 200 miles an hour. How's it going to
I
do?
don't think they're going to test it with a coconut. It's normally a 2x4.
I haven't seen the test with a coconut, but they send 2x4s by way of an air missile into not just the center of the units that they're testing, but into the corners, locks, and any vulnerable area. And basically, then after they fire this, number one, it can't break. It cracks, but it can't actually break. It can't open. And by the time that's done, they then have to take that window, which is in a sealed box, and expose it to cycle testing of wind pressure, positive and negative, back and forth in hard, quick bursts multiple times, and it still can't fail. So, yeah, 200 miles an hour, coconut, piece of cake.
Okay, and it also, it doesn't crack the window. It cracks it, but it doesn't shatter it. Yeah, it doesn't allow anything to penetrate through it.
It has to be laminated glass, and the laminated glass will crack, but the plastic film in the center of it is such that the glass will just stay where it is, held in by the plastic. So similar kind of glass is security glass, and they use the same technology, a little bit different layers, and same thing in bulletproof. It's the same technology. In security, it's tested by how many minutes it would take somebody like a young Arnold Schwarzenegger with an axe, a torch, and a sledgehammer to get his body more than 50% through the plane of the glass. So this stuff is, it's very, 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 very tough.
Yeah.
Thank you.
Thank you for
Well, wait there. Now I'm worried about your house. Let's talk about the doors and the roof. What do you got going on there?
The roof, back in Hurricane Andrew, they had staples that were really small. I mean, they went through the layer of asphalt and then only maybe a quarter inch into the plywood. When my house was built in the 1950s, the roof is tongue and groove with nails that are like 6 inches and all that. So yeah, they changed the code, but that's the first thing to go is the roof.
You know, somebody mentioned quality in terms of prefab and pre-manufactured. And I submit that certainly because of the way some tract homes are built, I believe you might sometimes see better quality in a pre-manufactured home than you would probably see in a tract-built home. Tract-built home, almost every piece of it, and you builders out there can confirm, is that builder-grade material. In order to get that interim funding, you got to produce so many units and sell so many units before you can move forward. So, you know, yeah, you've got a 1-year fit and finish and a 10-year builder manufactured, but the truth of it is where does the quality truly sit? It looks pretty for about 12 minutes. And then, you know, somebody lives in it and it's like, oh crap, the wall's scuffed and what the hell is this? And, you know, so, you know, in a factory built, you have a better window of time. You've got a different quality of inspection that happens. There's not the same time impetus that, in other words, the workers aren't under the same time pressure to get this product out, even though there is a timeline. So I would submit you probably get a better product many times with a pre-manufactured than you do a track build.
I'd agree with that.
If you don't mind, to further comment on that, I'm an industrial engineer, which is manufacturing systems, and the thing that happens is a factory manufactured house is a factory. It's like a production line. So you're not exposed to the weather, you're in a controlled environment, and the inspector is in one site and can do his level of inspection right there, as opposed to running around a track that the guy is there, the guy is not there, he says, and so the product is more coming to them than them running around to the product. And anything that can be done in a repeatable process, which is in a factory space or in a factory setting, can be controlled, and therefore the likelihood of higher quality control is astronomically higher.
Absolutely, yeah.
And that's the
Great
way
point.
it is with our panel boards. When we do the electrical construction of them, the quality control is so much better because you don't have that human factor of somebody not doing something right, not installing it right, cutting the feeders too long, cutting them too short, having to re-pull them. We also do smart space installments also. We have a whole...
What's that, smart space installment?
Smart space installment is Bluetooth, Wi-Fi connection, panel boards inside of the units which can monitor the amount of energy you're using for each branch circuit so you know where your energy is going to. We have a whole division of our company that specializes in that. Not only can you do it with the smart space stuff, but fire alarms. We're getting to the point where we're actually pre-building fire alarm systems. A lot of it, not all of it obviously, but a lot of it pre-manufactured at the same facility where we you know, pre-manufacture the electrical panels. So it really saves us time, cuts the material cost down because there's not wasted material like you have when you actually have guys out in the field, you know, redoing everything and pulling them too short and having to re-pull feeders, and the time is really of the essence. It's all about quality control and it's all about saving time.
So let me ask the panel. So we've talked a lot about, you know, the differences between the two. Is a prefab, is a pre-manufactured the future of real estate and the construction industry? What do you think, Simon?
I mean, I don't know if it's the future. I definitely think it'll be part of it. I don't believe it'll be the only way moving forward. I mean, look, I live in Irvine, California, right? Right in the heart of Cookie Cutter Central, right? Every home's the same. I even maybe even told you guys the other day. I can't remember which room I said it to. I went into the wrong house once when I first moved there. I literally did. Every fourth house looks exactly the same, right? You got model 1, 2, 3, 4, light or dark scheme. Which one is it, right? And if they're not, they're mirrored.
Right.
So I just moved to Irvine from San Diego, and I remember going. I went for a walk. I wanted to see the area, so I come home. They left the front door open. And there's a family. My child. There was a family just sitting there. And but that was the first thing that I don't like about those track homes. They're all the same, and the HOAs. Sorry, you guys say HOA, however you say it. They dictate you can't change the facade. You can't change the fore and fawn out the front. So you're really limited. And like you said exactly, they look good for 12 months. 2 years, 3 years, and then they start to just fade and tarnish drastically. When I first moved to Irvine with my family, my next door neighbor, prior to COVID, paid $1 million for the house. It's probably worth 2 now. Within 1 week, you had plumbers, construction crews, and a tarp over the house. I said, "What happened?" He said, "There was water coming out of my kitchen ceiling." They never waterproofed the membrane of the shower pan.
Wow.
And then he found out that the pipes were never big enough.
Right.
All the things that you can't see as an everyday consumer that they knew they were doing.
Right.
And they weren't building one house;
Yeah.
they're building a whole suburb here. So that little bit of shortening a pipe from, I don't know, 5 inches to 3 inches might save them a couple $1 million.
Right. Completely.
Not only that, pipes not being large enough, they may cut corners when it comes to the size of the pipes being large enough to be able to handle the amount of water that needs to be, distributed throughout that.
And we're in California. We're on a fault line.
Yeah.
And they're not putting copper; they're putting PVC,
Yeah.
and they're all cracking, and everyone's getting slab leaks. So I don't. I mean, look, the city's going to continue to approve it because those guys have got big money. You go down to Irvine, you got the Irvine Company, which pretty much own everything.
Yeah.
Right?
Irvine's
They pull the shots.
That's right.
They tell the city what they're going to do, not the
right.
city approving them. So I don't know how quickly it'll go away, but I'm definitely seeing people getting frustrated with the level of lack of quality.
Yeah. So, I mean, do we see it trending? And if so, what time frame do we see it converting, right? I mean, you're right. They'll probably always have stick built. Always, at least to some degree. But we've already articulated convenience. We've articulated cost, time, all those things. Is there a possibility? Do you see that in the near term that housing could switch more to pre-manufactured prefab versus stick-built?
My thing, I feel, and maybe it's just a California thing, coming from Sydney, Australia, which is like a mini New York where it's very dense and close by, moving to California where literally everything's half an hour drive minimum.
Get on the 405, be stopped for 7 hours.
I live half my life on that damn freeway. But they say there's no more land.
Yeah.
There's so much damn land there. But then they have all this open area, and then they put every house right up against each other, so there's nowhere you can literally touch your neighbor.
No, that's already part of that.
And that's
system.
where I'm like,
Yeah.
I feel to your question of when do I think it'll come, I think it'll come when the cities actually finally put their foot down and start adopting a proper system that's going to be more beneficial to the future of their area as opposed to what's going to go in their pocket at that time.
Gotcha.
Now, I don't know how likely that's going to be to happen because it's something that is called corruption.
Didn't hear it. La, 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 didn't
But
hear it.
at the end of the day, I love living in Irvine for the fact that it's got the best school district for my kids.
Sure.
But I hate living in Irvine for the fact that it's literally you're on top of each other, and I can hear the person 3 doors down having dinner at night.
Yeah. I used to live in Costa Mesa, so
Yeah.
totally get it.
Had an
Yeah,
officer.
Totally get it, right?
If you travel to the suburbs, you will find a lot of the houses that are in the suburbs are pre-manufactured houses.
Yeah.
A lot of it's not normal stick construction, it's pre-manufactured houses because they have a lot of land and maybe not a lot of money to be able to build a house, so they go with the pre-manufactured houses instead.
They're still putting them on a concrete slab though, right? Yeah.
They're still anchored.
Yeah, they're not raised. Okay, gotcha.
Questions?
Some of them do have to raise when you have a floodplain problem.
Gotcha, yeah.
I do think that modular will be, and prefabricated will continue to grow just because of the fact we're losing skilled labor force. So I think the issue
Great
more is
point.
labor
That's a
rather
very
than
good point.
materials.
Yeah.
So my question is, with regard to labor, material shortages and 2x4s and the cost of materials skyrocketing, is your company investigating alternatives like SIPs, structural insulated panel systems, where you're eliminating the 2x4s and creating a sandwich for the structure and creating a more environmental, higher eco rating?
We don't really do any of the architectural stuff. Ours is just the MEP systems. Okay. But you see a lot of creative things. We're actually using flexible metallic conduit instead of PVC because the price on PVC is just through the roof. And it's tripled over the last 2 or 3 months. And everything we did before, we tried to get as much in the slab as we could because PVC was cheap. Not anymore. So we're having to continually change and shift our best practices to adapt to what's in the market and how the market pricing is going.
That leads me to a question too. So you're talking about like manufacturing is going to be cheaper and that sort of thing. What about resale value? I know that location and things like that come into play with an answer to that, but I mean, do they decrease in value?
That's a really solid question. So I think there's been a myth over time. So most people think pre-manufactured as a trailer park, right? Oh my God, you live in a trailer park, right? There's that stigma that exists, right? Because it's not traditional. I want that stick built because that's what everybody else has, or that's what my neighbor has, and that's what I'm familiar with as far as permanence. And again, just not true. It depends on area to area for sure, but just not true. Again, in the Bay Area of California, I've seen multi-million-dollar properties that were modular, that were manufactured, that the resale was through the roof. And it's also timing in the market too, right? What I've seen over the last, more specifically 13 months, is normally a manufactured home, depending on material, hovers in the Bay Area around $200,000 or $300,000 normally, and that's for a 3-bedroom, 2-bath, around 1,500 square. You're seeing them for 50, and again, part of it is due to inventory and lack of, but absolutely, retail, when there is a demand, you will start to see alternate products move and move successfully. It's an easier entry. Lots of what happens in a manufactured community, depending on what type it is, and particularly if it's like a park setting, or age restrictions, things that you can do. Is there ownership or is there fractal ownership? So you're looking at dynamics that happen in that realm. But absolutely the retail's there. It's like anything. If it's well maintained, if it's in a nice and desirable area, absolutely you should see prices rise. So I think everybody knows historically in a normal market, homes appreciate anywhere between 2% and 5% per annum. Some of our markets, like as I was sharing with somebody at lunch, there's an area where I live that's appreciated almost 58% in 24 months. So it just all depends on where you are. So if you're in the middle of somewhere out in the middle of somewhere else, resale might be difficult, but so that's kind of the way to look at it.
Have you found with COVID that there was a rise or a fall in people being interested in manufactured or prefab?
Definite rise. Yeah.
Definite rise. Definite rise.
People want space.
Yeah.
They want space. They want to work from home, so they need to have a separate home office, or at least a place where they can carve out and work from home. I used to do a lot of travel into the Mid-Atlantic. That's from my region, Washington, D.C., Virginia, Delaware, places like that. Now we do it all via Zoom. And it's not uncommon for us to have a husband and a wife, both on the phone, both on a conference call, sitting in the same office 5 feet apart. You hear both conversations at one time. That's just the dynamic of what it is. So people are understanding now that we need a little more space so we can work and have our own dedicated space in the house to work from.
That's where I've seen the rise of the ADU. Do you have a lot of ADUs
in San Diego, down south of Orange County, California?
Yeah.
They're now allowing you to put up to 3.
It depends on the
size of your lot, obviously.
Still hit the setbacks.
You've got to have the setbacks, and you've got to have
three,
up to 3 now. You can have. They just increased that as of January.
Yeah. Wow. That's big.
Because there's a massive shortage.
Sure.
Yeah, we've spoken about it all week.
Yeah.
There's a shortage.
Yeah.
There's massive demand, lack of supply.
Yeah.
And these ADUs are, they're pushed up in 3 weeks, 4 weeks. They're done.
3 weeks. That's it. Yeah.
Right.
Mom, you're out back. Right.
Right. Exactly.
Yeah.
And the ADUs are sometimes even being used as home offices.
Yeah. Completely.
Right? Oh, we don't want to put a tenant in there, but we're going to have our office on our site still. We've got a backyard, might as well use it.
Yeah.
Which is like what I was speaking about the other day. It's all about space. Everyone wants the space, and they're paying a premium for it. San Diego is the second quickest growing city in the country right now, behind Phoenix. Although everyone from San Diego's moved to Phoenix. They're just going to move out when they realize what summer's like. But they won't be able to buy back into San Diego because the prices have just gone crazy.
Right.
That's like everything northeast is coming down to Florida. I mean, they're coming down there because, first of all, there's no income tax. And the taxes in the states in the northeast are just, people are tired of paying them. So they're coming down to Florida, and they don't have the COVID lockdowns that you have in some of the other states. And I think my new house is 1,400 square feet, and I paid $175 for it, so it's at about $120 a square foot compared to new stick construction.
That's insane.
Yeah, it's insane. Yeah, coming from where we
That
come
is
from,
insane.
it feels, and again, markets are always different, but in Irvine, if you're not familiar with Irvine, California, or Orange County is definitely one of the high dollar areas of the state. The Bay Area is definitely the highest dollar of the state. So, I mean, 175 is.
Not anymore. San Diego just got it.
San Diego's
San
got it.
Diego is now the most unaffordable city in California, surpassing
crazy.
the Bay Area.
That's crazy.
Based off income.
Yeah.
Because
Okay.
obviously you guys are making a lot more money.
Yeah.
Because you guys,
Yeah.
rolling in it.
Yeah, right.
And in San Diego, no one's working.
Seriously.
They're just stoned all day.
Right. So, I mean, when you think about pre-manufactured and prefab, are you guys seeing people buying more raw land or undeveloped land and building off-site, building away from a community?
I'm not seeing that because I think the problem is people don't have the money because you can't get a loan on the raw land. So you got to have the cash or you got to take a hard money loan and that's going to cost big bucks.
Yep.
And then you got your time. That's the big determining factor.
No
is
entitlements, right?
You got to get everything passed. You got to get the utilities hooked up. This could be a 1, 2, 3, 4 year project.
Yeah.
And do you have that luxury of having the holding costs up your sleeve?
Right. If you could have done it all over again, the property you built in San Diego, and you had, isolated somewhere to where you literally had to go ground up again, would you do it?
Yeah.
Yeah?
I love it.
Okay.
I love it.
Yeah.
I built a one-of-a-kind property that is now a case study at the city of San Diego that will never be allowed to be built again.
Wow. It's incredible.
It's like I said, 7 stories of glass.
Yeah.
And I sold it to a gentleman who will never use it, which breaks my heart.
Yeah.
Yeah. Sold it
Engineering marvel.
a gentleman in China saw it online, bought it, cash, and he just wants to keep it to save his money.
A lot of wasted air conditioning in that 7 stories of glass.
Well, yeah, that's the thing. So on that point, I would stay there one night a week, every week, just to keep the lights on and move things. No one had ever lived in the house. The electricity bill was $2,000 a month.
Insane.
And no one was living there.
Yeah.
But we were going to put solar on
I was just
because we had a
gonna
flat
ask,
roof,
solar.
and we actually had, so we had to cancel for the buyer. But we were going to put solar on, which is going to drop it down to $500. And there's so many great solar programs out there right now. They're not as scary as the ones that they used to be.
We're talking about prefab. What about the integrated tiles? Those are great, right? That's a prefab
Love that.
product. Yeah.
Love it.
Yeah.
Look, we obviously we put everything custom in that home, but there are ways to do things really inexpensively.
Yeah.
It's about looks, it's about the quality, and it's about what you want.
Right.
Right. Whites, beiges, browns. Depending where you are. Everyone says Tuscan. I can't stand Tuscan style. You don't see it in Tuscany, by the way. But you see it in Orange County, it's Tuscan style.
I was going to say, you're in Southern California. And
Everything's Tuscan style. Mediterranean Tuscans.
Yeah.
No, but the prices will continue to grow. Everything's going to keep going the way it's going. We're just seeing a lack of supply, and no one's buying land because the only land is really out if you're going inland towards Palm Springs
That's right.
or Hemet, Victorville, middle of nowhere.
Awesome. Other questions?
Who's ready to go to Vegas?
I have one, and this is probably the most important question you'll hear this entire conference. So if you remember nothing else, please remember this. Simon, where'd you get your socks?
Oh, I can't tell you that. I have a lot of stuff. So I actually have in my team agreement with my office, and I've got a few dozen workers. You're not allowed to come to work for me if you wear plain socks.
Nice.
Life's too short to be boring.
Oh, man.
Good deal.
So
I got fired right away.
So you got to come. It's not. I'm saying like black. People just, sorry, not fair. Okay, yeah. There's always one, but okay. But no, I'm always about the I like to accessorize.
Yeah, if you can't hide it, decorate it, right?
And real men wear pink.
That's right. That's right. Well, gentlemen, thank you so much for really great information about a very specific part of realty that I don't think a lot of people knew or were actually very confused about. So thank you for your information and your time today.
Thank you for the opportunity, guys.
Thanks so much. All right.
Thank you so much to the panelists. All right, now let's move on to our final session, which is a fireside chat. It's on the topic, the future of residential property post-COVID. Please welcome the speakers, James Mack, who is the CEO and founder of Grey Glove LLC, and Ed Page, who is the CEO and chief engineer at Twofold Doors.
Hello? Yes, mine is.
It's Gray Grove, not Gray Glove. I don't know. I think they said Gray Glove. It's Gray Grove LLC.
You're the man. I'm just a sidekick here to
And
make him look better.
I should have a slide or two. All right. So I put together some slides yesterday, actually, so I wasn't going to have slides, but I thought I'd throw some of the data up, mainly because I wanted to use this clicker. Because I suspect it's been user error the whole time.
Big green button.
It is. It's a big. How do you miss that? It's a big green button.
That's forward, and the red one's to the lower left is backwards.
So Ed and I actually touched base before we got here, and had a good chat before we arrived in Las Vegas, it's been a great conference so far, and I view this as somewhat of a summary of a lot of things that have already come up, because I'm not sure what else there is, what else I can add. So hopefully I can add a little to the conversation, but I think mostly this will kind of summarize some of the key points that I've taken away. So the topic is, what is the future of residential real estate post COVID, and I think the way I view it, the lens I look at it through, is the buyer. The buyer is going to determine that. And so I look at the process that the buyer goes through. And I see it in 3 steps, right? And they overlap, and there's a lot of gray area, but very generally speaking, first they have to decide to transact, right? So first they have to decide, we want to move, we need to move. And then you decide, generally speaking, on a location, like a county, town level. And then the third step is you're looking at the individual properties. But going back to the first step, decision to transact, there's 2 elements that go into that: behavioral and financial. So you have behavioral. We have kids. We need space, right? We're in a condo and we need to move to the suburbs, or we need to be close to aging parents, or we just want more space for ourselves. And then you have financial, and this is where I bring up the first chart I have here, and I got this from the Atlanta Fed. So, and this has come up a number of times, and I was excited whenever this came up. The affordability question. So, a few weeks ago, I really started. I looked back. I wanted to really compare where we are right now to where we were in 2007, and then you'll see. I also wanted to look, where we were in the late 70s. So I really liked Scott's presentation. I agree with a lot of it, but this may present a bit of a devil's advocate view to some of the things you said. So this is affordability from. I took the low of right before the financial crisis and where we are now, and this is national level, so not nuanced data. But you see, over the last year or so, affordability has come down. And real quick, to backtrack, this is very simple equation. The total cost of owning a house, including taxes and insurance, over the median income. And affordability, they use 30%. That's their metric, 30%. So you see, to reach the level where we were before the financial crisis, we still have quite a bit to go, but we're going in the wrong direction. So that's the question, a buyer's pose, is presented to a buyer. Is this affordable? Can we afford it? So then looking more at comparing the two time frames, you have to compare the, see what is similar and what is different between prior to the financial crisis and now. And I think one major difference is, the mindset of the people moving. So right now, it's I view it more as a need to move. We have kids, and we need space, or we need to make this move now. For kids, for aging parents or whatnot. Whereas prior to the financial crisis, it was a little more, and I'm speaking very broadly, but we can buy 5 bedrooms instead of 4 bedrooms. The underwriting, we know this, the underwriting standards were looser. People were overstretching themselves more for less of perhaps a need, more for a want. So I do think that that people will be willing to continue buying houses. The affordability factor will slow down the purchase of houses, but will not put the brakes completely on the market. It's a different equation that the buyer is facing.
James, I'd like to give a little bit of a flip side of this. Sure. I'm looking for the fire, but no fire. That's good. You're young and a family and growing, and we're both bald, but I'm old and bald as opposed to far less so. Some of you, at least one of you, understands my situation. And in the last year, almost exactly, I did, during a time that wasn't great, I had an opportunity to unload an expensive house in a more expensive area, move to a less expensive area in a much smaller house. It wasn't pristine and it needed a little bit of work, and I moved into a house that was half the cost. So, and then I could afford to put all the things in it that I wanted to have in it. So older people, number one, we don't depend on income. We depend on what we have accrued in equity, and we're also largely downsizing. So what equity we have goes a little bit farther. So as our population continues to age and younger people, there's going to be fewer of them eventually because our birth rates are so slow. These things, what you see as the affordability threshold is, you said, less impacted than, so they're going to buy even though it's less affordable. Also, people's income after all the federal money that went into helping everybody created savings, and so people have savings as opposed to having income. So that's another factor that allows them to make a move, and people wanting to move to areas that are safer, people wanting to move to areas that are, I also went from a 45-minute commute to my factory to a 8-minute commute to my factory. So there are so many, all of these buying decisions and trends are based on such complex data that I don't want to say who knows, but the data says it should be going this way. But on the other hand, there's so many other intangible factors that you can't put your finger on, but you know they're out there.
Sure, yeah. Thanks, Ed, yeah.
Okay.
Well said. And that reminds me of a few other points as far as intangible factors and income. I believe Scott put up the stat that there's 6 million unemployed, correct? But there's 10 million job openings. So that's the other side of that coin. So it's very difficult to determine each household's situation and who has the capacity to, perhaps someone's not working, but to stretch their budget, the other person is on the sidelines waiting to work. There's a lot of dynamics, and almost impossible probably to get into the data to access data that deep. But that's another factor that I was considering. And question, Mark, right? Yeah. Sure. Yes. So I do I fall into the millennial category just barely, like by a year, and that's 100%. So we did that. Yeah, we bought a condo and we upsized. We upsized for because of COVID, because we wanted a yard, and yes, everyone has equity in their house now. But the reason we wouldn't move right now is because we have an excellent interest rate. So we, I already have a HELOC. We closed in late January of 2021, and within a year, I had a very significant HELOC I was able to get. And we would do that, but the reason we wouldn't move is because we'd lose our interest rate we have right now. So, but it's a spot-on dynamic.
Hello? I'm in a very convenient location. You're also going to have to pay, depending on when they bought. Let's say they bought 4 or 5 years ago. You're going to be paying significantly more in property taxes, and that's a challenge I see on both ends. I mean, whether it be young people or old people, it seems everybody's really worried about paying property taxes. So, I mean, I don't know what you think about that, but
yes, yeah,
that seems to be a challenge.
That's definitely part of the equation.
Because last year I think the new Trump tax plan took place, and you could write up to before you could write up to $9,000 in interest off your taxes, or $9,000 in interest. Sorry, taxes and deductible. Now it's only $4,000. So I mean, I get both sides of it all the time. Even old people that have to move, they're paying taxes on a home they purchased 30 years ago for $100,000. You know, it doesn't really make sense, even though they have $1 million in equity, to go buy a $500,000 condo when they're going to be paying significantly more taxes. So
that's a great point. And yeah, personally, we considered the taxes highly when choosing the area and the town. Yeah. You want to add anything?
No,
I want to do what I do, just not pay taxes.
I'm enjoying the taxes that more of you younger people are paying. Thank you.
So that's a great segue to my next slide, and this is the first time I'm going to try and press this button. I did it.
In the right direction, yes.
Yeah. So this also is, off the Atlanta Fed's website, and this shows affordability. So it's what we would all expect, right? You have the less affordable on the coasts, but it proves that there is, according to their metric, their 30% metric, there's quite a lot of affordability still in the United States, and this is, I think, COVID is going to have a huge impact on in this area going forward, because if I showed you this 10 years ago or 20 years ago, and we asked ourselves the question, why wouldn't people just move to the more affordable areas? And the answer is, and we know people didn't, and they just made the less affordable areas less affordable. But with the remote working, there's been a psychological change and an inflection point where people are realizing they don't have to, they're told they there's remote working. You don't have to be super close to where your job is. Even if you do have to be in the office a few days a week, you can really extend that commute. So that's one. So the remote working allows people to not be in these unaffordable centers. But I also think, and this is not supported by data, but I do think there's a mental shift that maybe is contributed by COVID, that people are not adverse to the concept of returning to their hometown as much as they were, or going to less popular areas. And one of the reasons for that, and this is more anecdotal, is there seems to be a generational shift, a generational turnover of local restaurants and local stores. So, I think in Mark's slides, the age of most buyers is 33. And we're at a point where the 33-year-old is going home to visit their parents, and they're seeing that the old pharmacy is actually a nice coffee shop now. And there's a brewery in their town. And it's all of a sudden not as uncool as it was when they were in their 20s. And they have a kid or two, and they need a yard. And they're working remotely. And so, on the net, there's this more acceptance of trying new areas out or going back to the hometown that is more affordable.
Okay, let's move on.
Mark.
Sorry. Yeah, I know, right? Sorry.
We could all just sit at one table if you want, and won't need the microphones.
It's social distancing. So there's one other element with working at home, and that's cars. Instead of needing 2 cars, now you can get away with 1 car. And if you take the car payment and the insurance and the gas and all that, that's $1,000 a month that you're saving. That'll pay for your property tax.
Great point.
Maybe not in Beverly Hills. Okay.
So then moving on to, so that was the first step, decision to move, decision to transact. Then you have to decide on location. And I feel like I did touch on what I wanted to say about that. I don't know, do you have anything else?
On location?
Yeah.
Again, a decision for my husband and I were to move closer to the factory, downscale, less proper. We had 7.9 acres, and we've moved to an acre. And it's, so these are decisions that different people face and different circumstances, and these circumstances that drive these decisions have changed. The metrics that you make these judgments by have changed, and a big factor is COVID. And even with COVID receding, the idea, it's sort of like the mentality of what happened after 9/11. 9/11, my opinion on 9/11 is Americans became hysterical because one tall building and 3,000 people died. That's a terrible way of phrasing it, but it's the facts of the matter. And we became hysterical and infected everything about how we lived for several years because it brought to mind the possibility that that could happen again to any of us in America who were theoretically immune to this. This is what happens in the other parts of the world. It doesn't happen in the United States, and it did happen. Therefore, there's this lingering mentality of what can happen because it did happen once. And the idea of COVID having hit when nobody would have thought, and it happened so fast, and nobody knew how to deal with it. And the fact that we have come up with vaccines and everything else, it's fine, but people are saying, I want to be able to live closer to my family. I want to be able to do some of these things. I don't necessarily, growth, big, 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 big. I don't know. Maybe I just want to be able to recede a little bit and pull back. So the impact of the mentality and what we're looking for in life, quality of life, working from home, spending, I commuted from New York to Tucson, Arizona for 2 years. 12 days out and 12 days back, basically. Because that's what I needed to do. And it wasn't that long ago, but I wouldn't do it now. And now I can do almost my entire business remotely, and I do. I have workers that work from. We're a very small company, and half of the people don't live within 100 miles of where my shop is. I have a sales guy in Florida. I have a software technician in Florida. There's people all over the place that can do, and I can be anywhere. I never meet with a client. I do it all electronically. So I chose to be at the factory because, now that I'm 8 minutes away, I go there once every week or once every 2 weeks. I'm 8 minutes away. So I sit upstairs in my little room with Zoom, and, I've got 10 Zoom calls a day. They're short. Somebody asks me a question, they want me to see something, and then we're on and we do it. There are all of these factors that are going to change how we make these decisions. We're making predictions as based on historical data, and history is what happened, and what's going to happen is going to be based on what the facts are, and they are going to change. Whatever you think they are right now, they are going to change. I don't know when, a day from now, a week from now, a year from now. So people are trying to stay flexible, being flexible and not being captured by a particular house payment that, it used to be younger people would buy a house and anticipate this, it's going to go up 10% a year, during some of the heydays, and that you're always going to make money on property. In recent past, we've had periods where you didn't make money on property. Sure. You lost money. You bought at the wrong time. So, these are the things that are, being flexible is probably the key on people's minds, and not being strapped with something that you can't get out of.
Yeah. Thanks. Great point, and great segue to my next chart, last chart. Single-family home prices from, what is that, starts maybe
70?
Yeah, 70. So Ed's right, and we've all lived through this now. Home prices do go down, as they did in 2008. I bought a house in 2007 and learned the hard way. But for the most part, and it was said during the last panel, home prices do rise. And during that time, and this is where I'll play devil's advocate one more time, Scott, from 1970, to the present, there's been, I think, six or seven recessions, right? And I do agree that we'll have a recession this year or next year. But basically only one of those home prices came down. And so for the financial crisis specifically because it was in many ways triggered by the underwriting by the housing market. So I think Ed said, and I don't think anybody really believes this right now. People
they
shouldn't
don't believe me.
Shouldn't. People shouldn't. You said people shouldn't buy and expect the home prices to rise right now, and I agree with that. But people should not hold off on buying, expecting to buy a dip.
Yeah. No, I was talking about doing it on raw speculation, that it's just going to, in 2 or 3 years, you're going to get, all of your closing costs and everything and make a nice profit in 2 or 3 years off of a property. Those days are, maybe they'll come again, but not soon.
No, yes, yeah. But if I was giving a friend advice, and I've heard, a lot of people say, well, I'm going to wait for the big one, or I'm going to wait for housing prices to come down because I missed the boat. My advice would be, you could be waiting for a long time and then be priced out altogether.
Yeah, there's always another boat.
So that's my third chart, and I will advance one more slide. Now, these are amazing. I've not seen one in person yet, but I'll turn it over to Ed.
These are mine. This is sort of what I do for a living. The product on the right is a kitchen pass-through window that is our future because it's a remodeler's dream, and anybody that has a house and wants to get a little bit more juice out of it, they can have the inside joined to the outside with a bar counter pass-through, and we can make those up to 10 feet wide and 4 feet tall, and that's our future because it's a small, easy to make. We're talking about manufactured. I can make this product quickly and in a controlled fashion. It doesn't involve custom engineering. The property on the left is our twofold product, which is a steel and Accoya product, very elegant, very thin. We make a whole series of windows and doors and everything else. That particular building, that was a block wall. And a young couple down in Collingswood, New Jersey, which is outside of Philadelphia, and a town adjacent to one of the most dangerous towns in New Jersey, is a little enclave of, we would say artsy fartsy, but it's a little boutique town that is a suburb of Philadelphia, and they bought this. They were actually on what's the HGTV show where you go out and look at 3 properties and buy one. Anyway, you know what I'm... House Hunters, yeah. They were on House Hunters, and they actually bought this 2-story building. They both had very good jobs in merchandising and marketing. They're very, very smart people. One of them worked for one of the NBC affiliates, and the other one was a merchandiser for a chain store. And they bought this property, and they built this business on the ground floor, and they built it... they sell plants and, I say, knickknacks. It's called Bespoke Home and Life. And then they live upstairs, and they did a nice renovation. This was a really crappy 2-story downtown in a dying downtown that had nice, shops and coffee shops and this and that is coming back. And that was a wall. That was a solid block wall. And they called me and they said, no, we want to put this folding door. No, we want to do this because we want to join the inside and the outside. They doubled their space. The space where these plants are and where the camera is standing was a alleyway between them and the next door. And they didn't even fully intend to merchandise that area, but they put a hole in the wall, bought $30,000 worth of glass product that has a level of what they thought was elegance, and it is. We do things that are thin and delicate, yet they're powerful and strong. So there's that conflict there. And the outdoor space has doubled their indoor space, and they also hold events there now. So they have enclosed it on the front end, so you can't even park a car in it. And they have a little area. They hold weddings and smallish weddings with less than 100 people. And they've done a phenomenal job. And they're selling online. They're selling everywhere, and they are amazing. I said, why are you guys giving up this job to do this? And they had a vision, and they said, we are going to be, the husband that wasn't the founder of this ended up quitting his merchandising job and they had to hire a couple of people and they closed down 2 days a week because they just don't want to work 7 days a week. So, these are decisions that people make that change lifestyles, change careers, and, they never have to commute anywhere. So these are things that, that people have as options, and they're executing those options to create a life that is more comfortable for them. No rat race, no being a part of an organization that maybe doesn't fully appreciate you, and you may be making a lot of money, but you're not having a lot of fun. So have fun. Stop listening to people talk in microphones. Go home. This thing is just about over. 5, 4, 3, 2, 1. Thank you. Comments? No. Let's go home.
All right, well, we've come to the end of our USA 22 edition. So, yay, round of applause for that. I hope you've all had an amazing time with us and forged new connections with industry leaders during these 3 days. Congratulations again to all of the awardees that have been nominated and won awards during the sessions. And on behalf of the entire team of the Realty 2.0 conference, a big thank you to the sponsors, exhibitors, and of course our attendees for believing in us and helping us to make the event a successful one. It's been an honor to be your MC. And if you'd like, you can join the rest of the conferences now. I hope you have a great evening. Bye-bye.
You were loved.